All right, team. So the SPY's actually looking pretty good today. Gapping up again. Green day from yesterday's CPI report. Today we have the other side of that coin, which is PPI, the producer price index. We also have retail sales, jobless claims, the ECB rate hike decision. We just got a lot of different stuff dropping this. We also have retail sales, jobless claims, the ECB rate hike decision. We just got a lot of different stuff dropping this. We also have retail sales, jobless claims, the ECB rate hike decision. We just got a lot of different stuff dropping this. We also have retail sales, jobless claims, the ECB rate hike decision. We just got a lot of different let's get started. So again, we got a lot of stuff. We got retail sales, PPI data, jobless claims data, the ECB rate. We got a lot of stuff. We got retail sales, PPI data, jobless claims data, the ECB rate. We got a lot of stuff. We got retail sales, PPI data, jobless claims data, the ECB rate. We got a lot of stuff. We got retail sales, PPI data. The ECB rate hike decision drops at 8:45. The ECB rate hike decision drops at 8:45. There we go. Let's get this up live. This rate hike decision drops at 8:45. There we go. Let's get this up live. This rate hike decision drops at 8:45. There we go. Let's get this up live. This rate hike decision drops at 8:45. Some old music playing. There we go. Let's get this up live. This rate hike decision drops at 8:45. Some old music playing. What the heck was that? Yeah, what was that? Hold on, I don't know what that was. I don't know if that's the music. Hold on, let me mute the music real quick and see if that's the song. No, it's not the song. I think it was an echo is what it was. Yeah, it should be better now. All right, there we go. I think it was an echo. But yeah, we're here. Can y'all hear the music? You should be able to. Let me know if you can. Yeah, Tesla could hit it. I mean, Disney's still up. Oracle did well. I bought Oracle yesterday. Microsoft doing okay. Coca-Cola. Google's still good. Honeywell, man. Ford. Again, Disney's still probably one of the best performers. AMC's starting to fight back. So AMC's starting to head back up. You can see the SPY at 448. AMC at basically $9 a share. Y'all can't hear the music? All right, let me fix this. Sorry. There we go. There should be music now. Let me know if you can hear it. Okay, we're going to do a poll. Does PPI and retail sales data cause a positive or negative reaction in markets? Is the question today. Let me know what you guys think. Do me a favor, hit that like button as well. Hitting the like button will definitely help. So hit the like button if you have the time. Run those like counts up. We appreciate it. Hit the like button. Hit the subscribe button. Follow bonds like a small amount. Yeah, AMC up to $9 a share. Hey, good for it, man. It needs us. SPY looking good over 448s. We'll see if it actually holds. Tesla up to 270s again. All right. Let me put this data up on screen. Ooh. Yeah, so all this data dropped at 8:30 a.m. Eastern Standard Time. The ECB interest rate decision. The ECB rate decision will happen at 8:15. And then the press conference is going to be at 8:45 market time. Again, do me a favor, hit the like button. We're trying to run those numbers up now. There we go. All right, so we'll put a timer up as well because most of this data drops at 8:30. So we got all right, there we go. There's that. All right, guys. All right, sorry. All right, guys. AMC at $9 a share now. Tesla up there too. Again, y'all hit the like button if you can. AMC right here at $9 a share. Still moving up. Looks good. What will ARM open at? I'm not sure. When is ARM opening? I know when they do IPOs, sometimes certain brokers have them early. I don't see it on TOS yet, though. Does the ECB have any effect on the Fed? Not really. Maybe a small amount, but PPI data is going to be more important. Is PPI under good news is bad news? I don't know. I mean, yesterday, like CPI and PPI shouldn't be, but PPI gets weird reactions, man. A lot of the time, PPI will come in lower than expected and the market will drop, right? Like I've seen that happen a lot over the last 6 months, where PPI comes in low and then the market, for whatever reason, drops anyway. I really don't know why that's happening, but it happens for sure. Yeah, but ARM's supposed to IPO. I don't see a price on TOS yet. I don't see it open yet. 47.51 on Webull. What's your thoughts on Plug Power? Interesting company. Hasn't had a great long-term chart, and it's a mid-cap stock. And again, I always tell people the risks of mid-caps. And Plug is actually a great example of it. Like mid-caps can be incredibly risky because people treat them like they're like blue chip investments when they're really not. And if you look at a long-term chart of some of these, like here's a yearly chart on Plug. This thing dropped from $30 down to $8. All right, so this thing dropped, over 65% just in the last year. If we put up a weekly chart, it's even worse. This thing since 2021 has dropped from $75 a share. And so what I see here with this one is the first thing is like this thing's probably got a lot of bag holders stuck in it, man, for lack of a better word. There's probably a lot of traders stuck in this from way back here. And, again, I don't know whether they should sell it or not. I really don't know. Plug, mid caps can be surprising in that they look really weak and they have a few really bad years, and then something changes. Maybe they get a contract, maybe they get a deal done, and they start to like do better afterwards. I've seen that happen, but it's certainly not a guaranteed thing. And so for Plug, I think the long-term chart is risky right now. But again, it doesn't mean it's not going to succeed either. Raul, please reply to my question. What's your question, bro? Let me read. Hold on. Looking for it. Where's your question? How will market react, or how will market reach to higher PPI if CPI was also higher? Please reply. I have taken short position in that market. I mean, what do you mean? Are you asking me why did CPI come in higher and the market pushed up? Because sometimes the market's nonsensical. And the real answer there is that it's mostly just because people have already taken their positions on that specific outcome, right? It's called getting baked in or bought into the market or whatever you want to say. And so a lot of the time the reaction that we get after PPI is like profit taking or selling, or CPI is profit taking or selling. It doesn't necessarily have to mean like higher CPI inflation drops the market. A lot of the time that's what you get, but it's not always for sure. And sometimes you get moves like this. Again, it's not as easy to make money in the market. If it was that easy to make money, everybody would sit around, wait for CPI to come in high and short the market, or they wait for PPI to come in high and short the market, or they wait for CPI to come in low and they buy the market. Unfortunately, the market's not that easy to make money. That would be way too binary of reactions, and in the market would just be really easy to make money. Everybody would just sit around waiting for CPI to come out, and if it came out really high, they would just short the market and make money. Again, unfortunately, it's not like that. I wish it was, but the market's not. The easiest way to put it is it doesn't give you that binary of a reaction. Like, it's much more difficult to predict what it's going to do. And again, I cover all of these things. So I cover every one of these things, right? It's just much harder to predict. You also have to look at extension. Nah, Bow. I know you're trolling me, Bow. What's your expectations? I really don't know what we're going to get for PPI. PPI is expected to show up at 0.4%. Jobless claims expected at 225,000. We got retail sales data today, jobless claims data today. We just got a bunch of stuff. Retail sales expected at 0.2%. PPI expected at 0.4%. Jobless claims expected at 225. Core retail sales expected at 0.4%. The ECB rate hike decision, I believe they're expecting a pause, but I'm not sure what they did last time. And then we got some ECB press conferences later. So, yeah, all good. What's up, Beach? What's up, Piper? So ARM goes public today. Does it really? Yeah, sorry, I'm looking up this thing, man. So like yesterday in jiu-jitsu class, dude. So like they teach you something and it's called cross face. And if you've ever been put in it, it freaking hurts, bro. It's basically using your shoulder and pushing it against the person's face to get them to like drop their guard, or like, to basically let you pass. Like, you push your shoulder up against their face and kind of like push your shoulder across their face and kind of put your weight on your shoulder, kind of, and it hurts. It really hurts. But I did it to some other guy yesterday that was pretty new. And I'm looking up whether that's bad form for me to do, Like, granted, I'm still a white belt as well, but like, should I have not used that on him? He seemed kind of mad afterwards. Granted, I mean, it's a bigger dude than me. This dude's like 6'2", just bigger than me, but like, still, kind of feel bad about it. Maybe I just need to toughen up a little bit, but yeah, AMC, honestly, back up to $9 a share. It's at 898. Hey, what's up, Wayne? Yeah, I hope it was okay. Again, I don't want to like discourage him from training or rolling or whatever, you know. But I don't know what's good for him and what's not, you know. I'm new too, so I mean. But it's proper technique and it's what you're supposed to do. And so, you know what I mean? Like, I'm not sure. What's the difference with most catalysts when they say it's core, not core? Examples like retail sale month to month, core retail sales. Core is excluding food and energy prices. So core is excluding food and energy. So retail sales excluding food and energy is core retail sales. Core CPI is consumer prices, the increase of consumer prices, excluding food and energy prices, so forth and so on. So anytime you hear core, it's excluding food and energy. So like gas and food, you know, which are two of consumers' biggest purchases, right? Now with PPI, like core CPI is very watched and very relevant, and you can watch it. Core PPI is less relevant. It's still somewhat relevant. They're expecting 0.2% for core. Regular PPI, they're expecting 0.4%, right? It's still relevant. It's just less relevant. Retail sales, core retail sales are a really big thing because, you know, it's all in that regard, the market might not have expected retail sales. You know, they might not want to see higher than expected retail sales for the same reason they might not want to see higher than expected PPI or higher than expected inflation data, because higher retail sales percentage means more people spending is essentially what that means. And that's not necessarily what the market wants. The market might not want more people spending because of inflation fears. And so, you know, that's the other thing to understand as well. But it's nuanced and it's different, bro. This mic sucks. Where's my other mic? Where's my other? Oh, there it is. Or not my mic. My there we go. Isn't part of the point being used to being in uncomfortable situations? Yeah, for sure. It is, but like, again, yeah, I'm seeing some stuff related to the ARM IPO. It is. It absolutely is. But like, really, like, to be honest, every time this dude's much taller than me. Right, like much bigger than me, much taller than me. But every time we roll, I body lock him and take him down very easily, you know. And then I pretty quickly get him into full mount. And this last time, I just kind of held him there. I tried to move the side control, and then he got me in half guard, right? And then I was kind of stuck in half guard for a little while. And so to get out of it, you know, I put my shoulder up against his face and kind of put my head on my forehead on the floor and just kind of pushed my shoulder into his face, which is what you're supposed to do to pass back into full mount. And, you know, I don't know. And I mean, he was fine afterwards, but I just want to make sure, you know, I don't know. I guess I feel bad. I've been in crossface and it hurts. And I don't think he was there when we learned it. And so that's my only thing is like, I don't think he understands that it's proper technique and that's what you're supposed to do. And he might just think I'm being a jerk, you know, which I'm not, you know, but anyways, I'll talk about the market. Yeah, so look at the SPY. SPY very strong as well. Tesla up to 273s. We're at 448s right now on the SPY, so that looks good. The Q, the NASDAQ. Why is AMC up? Is AMC news related? All right, so Citi expects the Fed to skip interest rate hike in September and deliver 25 in November. Yeah, that's what I expect as well. That's what I told people yesterday, regardless of what CPI showed, that I think the Fed's going to pause or skip. I don't think it's going to change their tune for September. Maybe November they might raise 25 basis point rate hikes. But I don't think they're going to do it next month, or I don't think they're going to do it next week. All right, so the Reuters poll says the Bank of England is going to raise the rate by 25 basis points to 550 on September 21st, according to 65 bank rate to peak at 550, according to a narrow majority. All right, so yeah, I know they sold a bunch of shares to raise capital, but we already knew that, right? All right, so yeah, they raised about $325 million in equity offering. Yeah, but didn't we already know they were doing that? Yeah, you could do 40 times what was the price at the market, so it was like $750. So like we already knew they were going to do that. Look, 40 times what was the price? Yeah. So like 775. It looks like their offering price was 775 or so. Times 40 for 40 million shares. Yeah. I mean, I'm not saying it's not great, but we already knew they sold shares. We already knew they did a 40 million at the market offering. And so all you got to do is calculate 40 multiplied times the share price of AMC, and that's going to give you how much they made from it, because they're selling shares, right? So if it's 40 million shares and each share is 7 something a share, you multiply 40 times 7, and that's the million amount that you get that they made from it, right? I guess my only thing is, like, why are they up this much from something that should have been pretty self-evident that they were going to make 3 something million from it? I guess a lot of the holders don't really understand what an offering is or what it means, and and they're going to make money from offerings. Like, offerings are good and bad. They're dilution. They're diluting the shares of the float, so they're bad. The reason the companies do them is usually when they need money, right? And so they're going to make some money from these offerings. That's a given. It's just kind of funny how AMC. I'm in AMC right now, so I want it to go up. All right, like, I hope it goes up. But I guess I think it's a little funny where AMC announces the offering and they drop huge percentages from it, and then they announce how much they made from the offering, and then they jump up huge percentages. It's just, the reactions here are funny. But hey, I'm for it. Listen, I hope it goes up. Hey, John, will the ECB data affect US? Maybe. I'm not sure. Yeah, I did. I'm up on Oracle, Yair. So I am up on Oracle. So it's nice, man. Yeah, my average is 109. It's at 112s basically right now. So, hey, I'll take it. Oh, it's at 113s right now. I'll definitely take it. Yeah, nobody knows. It's usually going to drop at different times for different people, Ricky, but most of the time it's going to be around noon, I think. Right? I might be wrong. Could be earlier. It's probably going to be after the opening bell, most likely. We might cover it in a stream. I was thinking about doing the ECB rate hike decision, but let me know. Also, guys, hit the like button if you haven't already. Bump the like button up. I'd love to break over 100 likes before 7 market time. So if we can, hit the like button. The SPY's still ripping up. Look at the SPY up to over 448s, moving towards 450 again. There's AMC again. Here's the Q. Tesla. Yeah, I agree. Yeah, hey, what's up, trading? Yeah, I guess that makes sense, Pawn. ECB decision is 8:15, not 8:45, right? Yes, that's correct. So the ECB decision is 8:15. The press conference related to it is at 8:45. So. If you're being offered 100 million in crypto, 100 million in stocks, what would you choose, stocks over crypto? Well, that depends, to be honest, Gaurav. The reason it depends is if everything is already set and paid for and regulated, I'd rather the stocks, right? If the goal is to, you know, get it out, without the regulatory bodies, I don't know. I would probably take crypto, but it depends. I guess I would probably, stocks are generally more liquid. So stocks are more liquid. They're going to be easier to sell and withdraw the funds from them. But there's also more red tape around stocks. And so it depends. If everything's legit, I'd rather stock. Because I could just sell it and withdraw my money from TD Ameritrade or wherever, and everything's all good. Sometimes it's not that easy with crypto, especially with withdrawals. So okay, got you pawn. My bad, dude. Let me check it out. I haven't even pulled up Discord yet. So let me pull up Twitter. PayPal reportedly overpaid $510,750 in the largest US dollar Bitcoin transaction fee ever. We'll cover that in a little bit. Here, hold on. I gotta mute this for a second so I can see something. But yeah. All right, yeah. So kind of crazy, dude. Hackers have taken over the MGM Grand, and they're wanting one of them. Uh, yeah. So hackers, man, kind of crazy. Yeah, the MGM Grand, man, taking over. Weird. So yeah, hackers, man, taking over the MGM Grand. Hmm. Sheesh. Yeah. So there we go. All right, there we go. Let me unmute this. Yeah, Caesars paid $30 million to get their stuff back. So like they actually paid out these guys, which is crazy, you know. Yeah, bro. They don't play in Vegas, dude. I'm you know, they're brave. Hackers who took down MGM. Yeah, it's crazy. Yeah, we actually did that video a couple days ago. Yeah, so MGM Las Vegas under Cyberattack, empty and not functioning as of Wednesday the 13th, yesterday. So, kind of crazy news, man. Yeah, well, I mean, the reality of it, though, is probably happening. My guess is this is happening. My guess are the hackers are overseas. Adam Aaron saying, I am delighted to share this extremely important news with all of you. I mean, bro, like, again, I'm in AMC. I hope it goes up, but I don't understand why people are acting like this is like crazy good. Everybody knew they were doing an offering. They knew how much it was. They knew it was a 40 million share offering. You can multiply 40 million times the share price to get how much they're going to make from it, which is 320 something million. And so I get it. Adam Aaron made this long post talking about the offering. I hope it continues to go up. I just don't see what the hype is about for this specific like news release. But hey, it's all good. I hope it keeps rising. Let's see if it does. Yeah, 30 million. Again, Oracle up. Oracle had that big dip. It's now at basically 113. Wow, dude, I'm very green again today, man. Very green. PayPal, I'm green. Oracle, I'm green. Microsoft, green. Red on Coca-Cola today, but I might DCA into that. Google. Looking at our poll numbers here, 40% of people think positive market reaction. I'm going to do a poll. All right, guys. We'll see what happens here, man. I'm excited to see if PPI helps the market as much as CPI did. Again, bump that like button, guys. We got 50 likes. I would love to break 100 in the next 5 minutes if we can. Do it now. Just do it one time. Might feel good. Don't be stubborn. Don't be a hater. Hit the like button, guys. Do it now. All right, so we're doing a poll here as well on Twitter. Again, you can vote on this poll. Help your boy out. We appreciate that too. Hey, what's up, XTR? Oil ripping up. Yeah, I've been in Exxon for the last like few days, and it's been doing really nice. Just big upward movement. Everything is pretty green on my end today. PayPal one of the most green. Etsy pretty green. AMC very green. Apple green. Disney still green. Ford I'm green on. Google green. Honeywell, man, came all the way back, man. I've been red in Honeywell for like months now, dude. I took advantage of their I did take advantage of their dividend payment last week. And so, but I've been in Honeywell, man. My average is at 191s, and yesterday we ripped up to 193s, and we've been basically sitting in Honeywell now for all the way back since like the beginning of August, maybe later July. Since July, August, and we finally started to go green. And yeah, it feels good. Yeah. Good one, Ricky. Time to buy MGM stock? Well, if it's down enough, maybe. You know, one of the crazier numbers, MGM, if you guys remember where MGM was during 2020 craziness, MGM was all the way down at $7, $8, $9 a share back in 2020, in the 2020 crash. So, yeah. What's your favorite stock to buy right now, guys? Let me know. Did I monetize the stream? I did. Good. All right, guys. Again, CPI yesterday, PPI today. Big day. We got our timer up. We still got an hour and a half before this data is released. Yeah, I responded to Adam Aaron's post, and I just said, genuine question. Isn't it self-evident that AMC would make that much considering they did a 40 million ATM offering in the sevens? You know? So Elon Musk has found himself in a battle in a $22 billion lawsuit. Yeah. Where's DraftKings at right now? DraftKings up to over $30. All right. Oh, yeah, you might be right, Jeremy. Yeah, it would be $8.12 something cents. So you're actually right. My math is off, but that's okay. I guess my point is like you got to just do basic math to figure that out. So what's the shock, I guess? Yeah, so all right, so look at Tesla bounce at 273s. Bear trap. Yeah. What's the news on Elon? I'm not complaining, just didn't understand why yesterday's CPI was good. Well, because it's not, again, I'll tell you guys this again, and you got to understand, right? The market is not that easy. If it was, bro, everybody would be rich, dude. Think about it, man. Like, this is what a lot of people misunderstand about the stock market, is that it is simply not that easy to make money. If it was, everybody would be rich, bro. Listen, if we were able to just sit around, wait for binary reactions to CPI data, everybody would be rich, bro. Everybody would just be sitting here. Like, listen, if it was that easy, I would just sit here. I would wait for CPI to come in really high, and I would short the market. Or I would sit here. I would wait for CPI to come in really low, and I would buy the market. Right? It would be very easy to make money. Same thing with earnings. Right? With earnings, I would just sit around, wait for a company to have a huge beat, a huge EPS beat, a huge revenue beat, a huge guidance beat, and I would just buy the stock and I would just sit on it if it was that easy to make money. Unfortunately, it's not that easy, and these reports are very nuanced, specifically with regards to where people entered. You know, a lot of people are already riding that expected outcome, so a lot of people are already front loaded into that expected outcome, and so when numbers are released, a lot of those guys that already front loaded, or a lot of those people that already front loaded into that specific reaction or that specific outcome, they're going to start taking profit. They're going to start doing a lot of other stuff. And that makes it much more nuanced than just high CPI means sell, low CPI means buy, right? It's just much more nuanced than that. It's not that easy to make money. And I genuinely wish it was, because again, it'd be really easy to make money. Same thing with earnings, but it's just not. Sometimes a company can have better than expected EPS, revenue, guidance, and drop 10%. Sometimes CPI can come out higher than expected and the market can go up. Again, it's just not that easy. It's not that binary of a reaction. I wish it wasn't like that though. But yeah. Yeah, a lot of green today. SPY up nicely. SPY at 444 or 448.60s here. So the SPY's looking great. All right, guys. So high CPI buy, low CPI sell. No, it's not that easy, bro. I wish it was, but it's not. I mean, the better way to do it would be what has the S&P 500 done over the last week leading into CPI. If the S&P 500 has dropped substantially in that week leading up to CPI, then you can maybe assume that there's some people are getting baked into this specific reaction. You can look at the last 2 weeks really as probably a little bit better example. So like the SPY 2 weeks ago was at 453s or so, 453s. In the last 2 weeks, it's dropped from 453s all the way down to 440s, 445s. And so over a 2 week period, the S&P 500 was down already heading into the CPI report. And we haven't really had any other economic data over the last couple weeks really. And so it's logical to assume that this was traders getting baked into this specific potential reaction from CPI. And so now that CPI is coming out, those traders sell and take profit, and in turn we get some bounces. I mean, that's one way to look at it, but again, in the end, it's just not that easy to predict. Yeah, oil has been flying up. My Exxon trade's been doing really nice. Again, we're in Exxon right now at 106. It's at 117 currently. CPI numbers were not that bad. Actually, everybody knew of energy prices. It was going to be up, but if you take away the energy numbers, show inflation is still trickling down. Absolutely. Yeah, I mean, that's definitely true. If you look at CPI, and again, it's like, dude, I see so many bearish traders, bro, like consistently bearish. If you look at core CPI still went up month to month, though. So core CPI went from 0.2% uptick last month to a 0.3% uptick this month. Year over year, core CPI was flat, though. And so when we look at core, which excludes food and energy, it's still up. But it's not core year over year CPI actually went down relative to the last one, which was 4.7%. But month to month, it went up 0.1%. It's still not bad though. Like, y'all gotta understand, it's kind of a 2 steps forward, 2 steps forward, 1 step back, 2 steps forward, 1 step back type of thing. I think Yellen and Powell's demeanor helped the market yesterday more than the actual numbers. Did Powell speak yesterday? Hey, what's up, Chris? Yeah, did Powell speak? I don't know if he did or not. NASDAQ makes huge moves during the day. Money is made and lost playing both sides. Yeah, for sure. Yeah, look at the SPY. Team. SPY is up. I'm for it. I hope it keeps ripping up. Yeah, oil's been flying up also. Again, PPI inflation data. If you want to vote on that poll, also give me a follow on Twitter if you haven't already. Here's the link. Nice green day in stocks. The only stock we're actually down on today, there's two stocks. We're down on Coca-Cola and we're down on RTX, which we're only holding a very small trade on. But everything else we're green and everything. All right, guys. So we got a little dip here in the markets. Look at Tesla, though. Tesla holding its own. Another one to watch that is influenced all this stuff is Nvidia. And Nvidia is really the one that's dragging the market up. Like, look at Nvidia rip over 460s at 461s right now. So Nvidia, Tesla, Apple, they're all helping the market today. Although Apple has been a little bit weaker relative to everything else. So in a period where a lot of stocks ended green yesterday, Apple ended red. It's green in pre-market though, but it's not as green as everything else. So Apple at 175s right now. A lot of people just didn't like this conference. They did not like the conference. All right, 461s on Nvidia. All right, so again, SPY has a little pullback here. I'm thinking about buying the dip. Again, we do have PPI inflation data dropping in about an hour and 15 minutes or so, about an hour and 15 minutes. Also, guys, hit the like button. All right, let's break over 100 likes. I appreciate it. The Apple Watch double click thing is cool. Yeah, I never got into the Apple Watch thing. I mean, again, I'm a Samsung person anyway, so like I have a Samsung phone. Green day, well, it's definitely green right now. Again, you can kind of see the market rip up. So it's definitely green currently. Here's the previous closing price way down here, right? So there's the previous close. This is the level at which we go from red to green, green to red. You know, you can see the market pushing up big on the day there. And yeah, We'll see if we get anything good. Apple's still breaking down. Yeah, Apple did the deal with QCOM, and QCOM, of course, has been loving life from that deal. Although, there's 2 times I really like buying dips. One of them is after a big news release, right? Like after a big news release, if a stock like QCOM, and I didn't actually buy this one, but if a stock like QCOM has this big pullback after the news catalyst, right? So just to put this in perspective, you get a stock that has a good catalyst come out like QCOM, right? So you get a stock that has a good catalyst come out like QCOM, and you can see the big gap up here. This thing gapped up big percentages from like 106 all the way up to 113s, 114s, 115s. Then it dipped pretty heavily back down. So afterwards, it dipped all the way back down to 109s. That's usually a good time to buy a dip. It's not always. I can't guarantee you're going to make money, but generally, like if a stock, you got to think about it in terms of extension. And so good news is going to make the stock go up. And you get a lot of profit taking. Buying on these pullbacks and then letting it come back up makes a lot of sense, I think. The other time I buy stuff is when we get big, profound pullbacks that I think are overreaction. Like Oracle dropped all the way from 120s down to 107. We bought this a couple days ago. Maybe it was yesterday. And again, my average price on Oracle is 109.60s. So, we're in at 109s. It's basically at 113s now. So we got in right around here on the dip because, again, it had stabilized and it dropped down big percentages. And I just think it's an overreaction a lot of the time. So I'll buy these up. I'll sell them the bounce, take some profit, lock it in, and then see what happens the rest of the day. But a lot of my swing trades revolve around that type of overextension strategy where we're looking for things that are up big or down big. And then we're either buying pullbacks or we're buying, we're buying on weakness is a lot of the time what I'm doing. But when I do this, it needs to be good companies. Like Oracle has been doing incredibly well with crazy AI. Like here's a weekly chart on Oracle. This thing has just flown up big percentages, crazy big moves. And so it's just been up a lot. And so with that, I only do this strategy on blue chip companies because that's where it's the most effective. And it just works. It works well for me. All right, so again, market's up. We're up a little bit too much for me to necessarily want to buy this here, though. So we're up a lot, and we're gapping up strong on the day. If I'm going to buy this, I need like a dip. I need a pullback. I need something reasonable to buy into. I don't want to, buy it way up here around highs and risk just losing money. I would rather just wait for markets to pop or bounce and then capitalize on that. Hey, thank you, Joseph. I am learning lots listening to you. Thank you. Hey, thank you, brother. Noticed large trade yesterday. NEO $25 calls for January. Yeah, Neo is one of those stocks that I just don't trust, man. I just don't trust it. I think there's too much risk taking this thing. There's just too much risk. Again, we're all pulling back a little bit, so I couldn't buy this dip. Let me see. I haven't even traded on futures yet. Again, on my actual funded account futures, I'm taking it pretty slow. Pulling up Quant Tower. There's my funded account. Yeah, we're nicely green. We got about an 80% win accuracy on this funded account. Slightly green, which is nice. In order to beat through the scaling plan. Remember, we do roll over contracts, so if you're in futures, you need to roll over your contracts. Yeah, so it's nice. I mean, here's my winning trade accuracy on my actual. This is on my actual funded account, right? So this is on my actual funded account. Top Step. And so again, I've always told people, like with scalping, I have a high accuracy break-even risk to reward ratio. So it's like I'm not trying to get like a 2 to 3 or 2 to 1 or 3 to 1 reward to risk or 4 to 1 reward to risk or 5 to 1. Like nobody's trying to do that. Like I'm just looking for a high accuracy rate in which I can I'm just looking for a high accuracy rate. Market's starting to bleed down a little bit though. I'm just looking for a high accuracy rate and a break-even reward to risk. Like you get a lot of people who are just trying to sell you stuff saying that they got a 3 to 1, 4 to 1, 5 to 1 reward to risk ratio and like a 90% accuracy rate. That's just a fugazi. Forget about it. It just doesn't work, man. You're not going to be able to consistently find that. And so 80% is fine with me. I'm just looking for a high accuracy rate with my systems. Swing trading is a little bit different. The swing trading is very different in how I trade, but again, hit the like button, guys. Let's break over 100 likes real quick if we can. All right, so we're in our Top Step, not our funded account, but in a different one. That's 80% in how many trades? Let's see. 9 plus 7 plus 3, so 19 plus 5, 24 plus 2, 26. So that's 26 trades. So yeah, about 26. All right, so look at Oracle. We're watching Oracle. We can also look at Tesla here. Here's Tesla. Again, Apple is really what's dragging the market back down a little bit here. Look, Apple down to 174.70s. Yeah, I mean, generally with technical analysis, guys. Um, with technical analysis, it's such a subjective thing. It's such a subjective thing that everybody's different. Like everybody trades differently. Everybody's going to be able to do different stuff. You know, everybody's going to like different indicators, and that's fine. Regarding technicals, though, generally an indicator works if a lot of other people use them, right? And so one of the reasons the volume weighted average price works is because a lot of other people pay attention to it. And so a lot of traders short term are reacting to it, and that gives it some validity. Um, Now, there's other reasons that technical indicators work. It's not just purely from that, but but yeah, everybody's different. People can like different indicators. One is not right or wrong, you know. Like I get people all the time that are like, "Hey, my indicator's the way, and any other indicator sucks." And it's like that just generally means they don't have that much experience because like once you gain experience in the market, you understand that like there's 1,000 different ways to trade, and it doesn't mean anything's right or wrong. It's very subjective, and it's really unique to the trader themselves. Like some traders are going to have different patience levels. They're going to have different tolerances for different strategies. They're going to have different preferences, and so with all of that, it varies. One's not right or wrong. It just depends on the trader using them. There's a lot of traders that can make a lot of stuff work that I don't, and vice versa. I can make a lot of stuff work that a lot of other traders don't work, and so again, it's not a right or wrong thing. All right, we got a little bounce here. I was really thinking about buying this. All right, so we got a little cushion on the day. The question is, does the market bounce? The NASDAQ popped up nicely here. If we look at like the NQ, or really specifically the Q got a nice little pop on the volume weighted average price. And again, going back to the VWAP example, I mean, this is why people watch the VWAP is because like, look, you pull back to it, you bounce. Pull back to it, you bounce. And again, you can just watch it each time, bounce, bounce. And so it's a really nice trend indicator. A lot of the time it works in pre-market as well. It's not always going to work, and it does depend on liquidity because it is a volume weighted indicator. And so, yeah, it can be powerful. We're also in a day trade right now in futures. 2 contracts to the NASDAQ. I'm going to lock half of that in just to take profit and let the rest ride. I like this because we ripped up confirming the strength, and now we're having a small little pullback for an entry. But luckily we took profit, so if it turns on us, we're still going to be fine. Got some down wicks there, signifying maybe some buying pressure showing up. Yeah, the ARM IPO today is big. A lot of people talking about the ARM IPO. I'm not sure when it's going to happen, though. And really, it just kind of randomly shows up at any point in time. I'm not sure. All right, so we got a little pullback, so we're probably going to lose a little bit from this trade now, but we're going to be prepared to cut it. And yeah, we're just going to cut that. So we're still green on the day, up about $100. But yeah, not the best pullback there for me, but it's all good. we still got time. And again, a lot of the market might be a little apprehensive, choppy heading into PPI data. Retail sales data, again, we just got a lot of different stuff coming out today. So be ready, guys. A lot of different stuff. All right, so again, we got a little pullback on the NASDAQ now. We are breaking down some. Is this going to be a red trend? Well, watch the volume weighted average price here. We'll see if stuff starts to break. I see a lot of stuff starting to fall back, though. All right, so we're under the VWAP for both of these here. And again, with retail sales, PPI data, we also have the ECB rate hike decision dropping at 8:15 market time, 8:15. So again, that is in 40 minutes from now, to the ECB rate hike decision, about 15 minutes before retail sales, jobless claims, PPI data. Again, today we got an array of things to cover. All right, so again, SPY bouncing up a little bit. So we did get a little pop back up. It doesn't mean much yet, but the SPY looks like it wants to hold the VWAP. The Q looks like it wants to hold as well. Let me check up on some news here. Microsoft is facing a formal EU antitrust complaint over its Teams application, according to Bloomberg. Catching back up on chat. Is there a calendar for financial events? Yeah, Market Watch. ECB and PPI both important. Yeah, they're both important to a certain extent. It depends on where you are. Like PPI is going to be more relevant to the market here. ECB obviously is going to be relevant to the more relevant to the market there. But it varies for sure. Adobe earnings. Yeah, I'm not really going to cover Adobe earnings. It's just not worth it, to be honest. Not a big enough company. What time is PPI? It's at 8:30 Eastern Standard Time. Yeah, and again, we're going to cover all this stuff. We're going to cover all this stuff. So it's like a lot of people use my channel as an earnings calendar. Like they know if it's important, I'm streaming it or covering it or talking about it, right? And so, we cover CPI, PPI, jobless claims, retail sales, which all dropped today. PPI, jobless claims, retail sales, ECB rate hike decision, all today. Again, the ECB decision is going to be in about 40 minutes from now, about 40 minutes. And so we got time. And so, yeah, we got a lot of stuff. ECB, I believe, is expecting, let me see. I believe they're expecting a pause, but I might be wrong. Wait, so is Market Watch now forcing you to log in? Damn, dude, that sucks. Guess I got an account here. I never even knew. Was Market Watch bought out? Dude. I think Market Watch just got bought out by Wall Street Journal. Maybe I'm wrong. Their economic calendar used to never make me sign in. There it is. All right, so yeah, so today we got jobless claims expected at 220 to 225K. PPI expected at 0.4%. Core PPI expected at 0.2%. Retail sales expected at 0.1%. Core retail sales expected at 0.4%, and then business inventories at 10. Kind of a busy time here, man. All right, SPY still dipping down. Should I change the beginner trading name? Like, again, I'm not really a new trader, and I kept it beginner trading as a way to like help new traders. Like, the goal of the channel is to help new traders. But should I change it to something more ambiguous versus like regarding skill? Let me know. I could always change it. It'd be a hard thing for me to do because I'm so used to the beginner trading brand and name. But I'm not necessarily against changing the name. I just, I'm not sure what I would name it. But let me know what you guys think. You should keep it. It suits you. You're very helpful. No, I like it. It's not a personal tag. It's a community tag. Yeah. I think people take shots at the name, though. You know what I mean? Like, people say, oh, this guy's a beginner, and it's like, dude, I've been trading longer than them, Like, again, like, you can kind of see the trends and everything. Like, bro, like, I've been covering these economic reports for years. A lot of people just started covering them and they're acting like they know what they are, right? Just to kind of get views. But, like, y'all know, in the end, it doesn't matter too much. The brand's pretty successful, and so I don't want to fix what's not broken. You know what I mean? That's the only thing. No, I like the logo. I actually like our logo, the candlestick logo. Bag holder trading, suitable, for sure. How about best number 3 beginner trader of the world? Top 3 beginner trading names in the world for sure. Definitely top 3. SPY at 448. You don't do VWAP penny stock scalps anymore. Yeah, I mean, evolution. Yeah, you're probably right, Sam. Again, Apple all the way down under 175s, man. A big dip. Again, we still got 45, 50 minutes, a little bit under an hour left. Hmm. All right, team. Yeah, the alien pictures, man. So honestly, this is kind of crazy. So like, they have these alien pictures that have recently come to light, where yeah, let me find it. It's kind of crazy. All right, so some crazy news that everybody seems to be talking about is that the Mexican Congress came out with a hearing on UFOs where they have alleged alien bodies is what they are saying it is. This is what they look like. This is an article by Reuters. This is what they're saying they look like. You can read it here. It says, quote, remains of an allegedly non-human being is seen on display during a briefing on UFOs, essentially in Mexico City, Mexico. This happened on September 12th. It's kind of crazy. You can also see, quote, I can confirm that these bodies have no relation to human beings. UNAM on Thursday did republish statements that were first made in 2017. And again, we're quoting here, in no case do we make conclusions about the origin of said samples. What do you guys think here, though? It looks like sand, but, very interesting. I don't know. I don't know if I buy it or not. This looks like somebody could have just carved the eyes and the face out. I really don't know. There's a lot of other videos, so let me know what you guys think. You can look this stuff up for yourself. Do y'all think this is legitimate or not? It's questionable at that for sure. But again, give me a follow and let me know what you all think. I don't know. Questionable at the very least for me. But I'm usually a skeptic of everything, so like I'm usually questioning everything. But let me know. Are you skeptical of these alien bodies or not? But again, questionable. I would say questionable. I still under the VWAP, still under the Q. Q was still under the VWAP. That is. All right, so you can see the SPY bouncing up. Let's see if we hold 448. 448. Hmm. Yeah. Again, I'm skeptical of the alien thing. I just don't know. They don't look real. Yeah, for sure. That's kind of how I am. Like I think that UFOs are probably a thing. Um, but I'm definitely skeptical of those pictures. I don't think that looks real at all. Bro, that looks like somebody made a sandcastle. But again, maybe not. I don't freaking know, man. Maybe it's legit. Uh so we did get a pop up on the SPY. Look at the SPY bouncing back up again. We got retail sales, PPI, jobless claims, the ECB rate hike decision. Remember, the ECB rate hike decision's at 8:15. At 8:15. So the ECB rate hike decision's in 25 minutes. Again, I'm trying to see what they're expecting here for the ECB decision. So yesterday we had CPI. Today we got the ECB rate decision. Uh, okay, so yeah, they're expecting a pause from 3.75 to 3.75. So they're expecting a pause. Um, they're not raising rates at all, from what I can gather by the ECB. So yeah, it doesn't look like they're raising rates at all, which is probably what we're going to get. And again, at 8:45, we get the actual ECB press conference as well in about an hour. And Lagarde speaking at 10:15 as well. Again, retail sales, core retail sales, PPI, jobless claims numbers in the U.S. data coming out today. So that'll be very relevant. We are getting a bounce back up over the or testing the VWAP here. You can see the Nasdaq here on the right. You can see the SPY on the left. Again, Apple has been pretty weak this morning as well. So Apple, it's still technically green on the day, but it's not very green. It was much more green. Nvidia up to 460. So I get Nvidia helping the market right now. So Nvidia helping the market looks okay. Yeah. Yeah. I mean, again, I figure they look pretty sketch. I don't know. I think there's some interesting theories in the world regarding extraterrestrials and aliens. I think like I think, and again, I'm going to preface everything I'm about to say with like, I don't necessarily believe what I'm about to say, but I think there's some interesting theories that make you think. One of them is, I believe it's called the Van Daniken theory. Basically, what the Van Daniken theory suggests is that religion and aliens are the same thing. And honestly, if you read the Bible under that context, it makes a lot more sense. Um, I think, and again, one of the interesting things they'll tell you is they'll say take a stereotypical gray alien, right? What would a stereotypical gray alien mixed with an ape look like, right? When you combine them together, and it kind of looks like us. You can imagine it might look like us, and so very interesting theories there again. But I'm not saying I agree with that. I think it's still a little out there, but it's interesting, and it definitely makes you think. There's some good episodes of Ancient Aliens out there as well that'll make you think too. But yeah, again, not saying I agree with it or not. I think they're still pretty out there. But yeah, I don't even remember anybody. I get so many people trying to predict different levels, bro. And a lot of the time, people will make like 4 or 5 different call outs, and then one of their call outs will be right. And so they'll ignore the 4 they got wrong, and they'll bring up the one they got right and act like they never said the other 4. And so I just, too many people trying to say I told you so in the market. I'm not saying you might not be right, bro. But again, I just, again, what happens is you get people trying to make these big, bold predictions. And, after a certain point, it's just like, I just don't have time to watch all of them, brother. Yeah, again, like I said, man, some people are getting mad. I'm not even saying I agree with this stuff, but I don't think you should close your mind off to where you just don't look at all these different theories. I think they're interesting, man. I think there's a lot of interesting theories out there in the world. I think the simulation theory is incredibly interesting as well. Um, and it'll mess with your head too. There's some good documentaries on that as well. But I'm pretty open minded about a lot of different things. I'm not saying I agree with any of them because I don't think there's necessarily proof behind any of them. And I think a lot of them go against science as well. And so, but they're fun to watch, you know. Don't be so rigid, guys. Yeah, all good, Joe. It's all good, bro. Make your calls, dude. I might not pay attention to them, but like make your calls, brother. Uh As a swing trader, what time chart do you prefer watching? I usually look at like a 30-minute chart. I like 30-minute charts. I like daily charts, weekly charts, 30-minute charts, 15-minute charts are usually what I look at when I'm analyzing swing trades. So we'll see if the SPY holds 448. It seems to be respecting 448. You can see we actually have that support level drawn from a few days ago. We also have the highs from yesterday here on the SPY. I think it's around 470, 447.75. If we extend this to the left, you got to see those highs up there. Hey, thank you, Kay. I appreciate you, brother. Thank you, man. Maybe, maybe T. I'm not sure. You know what I mean? It's all speculable. Uh, Please let me know when you figure that out. Yeah. Yeah, again, I mean, again, I think these are fun conversations to talk about. But it might be too divisive of conversations. I'm realizing. So we're gonna pivot back to trading, guys. Hey, we got 20 minutes until the ECB rate hike decision. Again, it's almost certain that we're gonna pause or skip for the ECB. I think 4.75 is what they were at last time, and I think they're gonna stay at 4.75. So they're gonna pause or skip, similar to what we'll probably do next Wednesday. And yeah, again, we'll see if we hold here, guys. The market's very green today, which is surprising a lot of people because of CPI data yesterday. So CPI data yesterday, um, came in slightly higher. I would say it was neutral to high inflation, right? So most of it was neutral, but we did have some higher points of inflation. And again, what a lot of people were shocked about is that the market ended up going up. And this is why I always tell people, like every major economic report, right? And I'm telling you guys this so y'all understand and so y'all can avoid being this type of person, right? Generally, every major economic report, we get people here that are really pressuring to everybody. They're saying, "You better sell. This is going to happen. You better sell, guys. You better sell now. This is going to happen. You better short. Only dummies go long right now, guys. And they're really pressuring. They're really shaming. They're like shame and pressure and shame and pressure. Again, I cover all these major economic reports. Generally, the people that are the most like that are the most wrong about the direction the market goes. And so understand the market does not have to do anything. We can get higher inflation data and the market can push up. We can get lower inflation data and the market can move down. We can get all these different areas in between that. And so I always try to find myself when we get these economic reports in a reactionary mindset. I'll react to what happens, but I'm not going to shame and pressure people to do anything. And I think it's important to understand that nobody knows. Nobody knows. The nuance of it is that, like the SPY, if you put up a 20-day chart on the SPY, market over the last 2 weeks or so has dropped. The SPY was at 440 or 453 or so, higher than that on the 1st of September 2 weeks ago. It had this big pullback, and this could be algorithms, big investment banks, traders, hedge funds preparing for higher inflationary data, right? This could be them preparing for higher inflationary data. And so when the data actually comes out here, they're starting to take profit. What happens when people cover short positions? They buy and the market can bounce. That's one of the theories regarding, or that's one explanation of what happened. And again, you have to understand, just because inflation data is higher doesn't mean the market's going to go down. And so remember, just be smart. Don't gamble on these reports. Understand, most of the people that are really pressuring just have a lot of bias and a need for the market to drop or go up or whatever it is. And so just be smart and understand, like with PPI retail sales today, the ECB rate hike decision, nobody knows what's going to happen. Just stay safe. That's the right thing to tell traders. That's the right thing to tell people at home. Um, because again, I cover every major economic report, and I'll tell you, the reactions are certainly not a given. So just be smart. Buy shaming. Yeah. PPI is a much bigger tell. I don't know, not necessarily. Usually with PPI, it's actually the opposite. Um, so like usually with PPI, I would say it gives less obvious reactions. Like a lot of the time, PPI will come in really low and the market will drop, right? Which is kind of opposite to how you might think it reacts. Again, a lot like lower inflationary data is better. Like PPI is the producer price index. It's the other side of CPI, which is for consumers, the consumer price index. But a lot of the time when I've watched PPI, it actually moves very contrary to what you might think. Like a lot of the time over the last year, PPI comes in low, like much lower than expected, lower than the previous term, and the market drops, which is a surprise because lower inflation generally is seen as positive. So yeah, PPI is definitely no exception to what I just said, and I think a lot of times it's even more so less given of a reaction. And so just be smart, be careful, um, especially if you're taking like options or whatever. Just be careful because again, PPI comes out before you can even cover your option trades, and a lot of people are gambling on options overnight. And so again, we'll see what happens. PPI is expected today, guys, at PPI today is expected at 0.4%. 0.4%. Last time was 0.3%. So they're expecting a 0.1% uptick month to month. Jobless claims. Again, how many people are filing for unemployment? Very relevant. Last time it came in at 216. This time they're expecting 225. Lately, what I've seen with jobless claims, which is a weekly report, again, it's how many people are filing for unemployment. Lately, with jobless claims, a higher than expected reading is seen as a positive, believe it or not, which means like less people working is seen as a positive because I guess inflation woes and fears. Again, initial claims are the important one. The ECB rate hike decisions in 15 minutes. So the ECB decision team is in 15 minutes. Again, they're expecting a pause at 3.75. And then again, we also have retail sales, which again, higher retail sales can be seen as a negative as well, with expectations month to month on that at 0.2%. So retail sales actually expecting to drop from 0.7 to 0.2% month to month, which again might be seen as a positive. It might be seen as the Fed's historical rate hikes over the last year actually starting to do some stuff discouraging that spending. Because again, the whole point of this, I've talked about this many times, but to understand it, team, the whole point of this is that every 6 weeks the Fed meets and determines whether they want to raise, lower, or pause rates. If inflation's really bad and elevated according to CPI, PPI, and specifically for the Fed PCE, which is the most important one that they watch, it's the personal consumption expenditure. If inflation is still elevated and still a problem, they will raise rates more aggressively. If inflation is less of a problem in their eyes, they will pause or cut rates. With all that in mind, the reason they're doing that is because if inflation's bad and raising rates, when you raise rates, when you raise the federal funds rate, it makes banking more expensive, and banks in turn compensate that by raising interest rates to consumers. And when they raise interest rates to consumers, again, consumers generally stop spending as much, and in turn, businesses lower prices to compensate for that lack of spending, and thus it combats inflation. Uh, And so next week on Wednesday, we get the rate hike decision. It's not really going to be affected by today's data because it's a little bit too late for that with next week's. They're probably already made up their mind. And I don't think anything that we get today is going to influence what happens next week, which is almost certainly going to be a pause or a skip in rate hikes. I saw an analyst say that they think that we're going to pause or skip this cycle, which I absolutely agree. I think we're going to pause or skip, and then we're going to raise rates in November. I think that makes a lot of sense. I think that's probably what's going to happen because Jerome Powell did say that they were going to raise rates, at least a couple more times this year, like 4 months ago, and they've done it once by now. I think they're going to do it one more time. Not this cycle though. But again, let me know what you guys think. Looking at our poll numbers here, 40% of people think the market's going to come in positive in terms of reactions. 33% think negative, 15% think neutral, and 12% say I don't know. So yeah, let me know what you guys think. Why do you prefer the SPY over the E-mini? I don't necessarily prefer one or the other. I think the SPY and on TOS, it's a lot cleaner to look at pre-market levels. But I watch trade the E-mini pretty regularly every day. So it varies, but I like the E-mini. But the SPY and the Q are something I watch. But again, tomatoes, it's the same thing basically. Trying to understand this that the economy is trash, that's good for stocks. It's good for inflation, not stocks, right? And so the whole point of the Fed raising rates, Gino, is to discourage spending because one of the things that has been troubling the economy, not really the market necessarily, but the economy has been troubled lately. Look at the SPY and the Q rip, guys. SPY and Q ripping up. Again, we got less than 15 minutes before the ECB rate hike decision. But one of the things that's been troubling the economy lately is inflation, right? The last 2 years, inflation has been really elevated. Gas prices have been high, food prices have been high. People are really noticing that on their end. They're having to get more jobs and all this different stuff. And so prices have been elevated lately. And so one of the common themes we've seen in the market over the last few years is that less economic growth is seen as a positive because that's ultimately why the Fed is raising rates. The Fed has raised rates aggressively over the last few years. And the main reason they're doing that is to discourage spending, to push down spending. Um, that's what rate hikes do is they push down spending because they're trying to curb inflation. And so there's a balancing act between recession fears and inflation fears, right? There's two different things. Um, if the market is fearing a recession, like in March of this year, banks had those big failures, like those regional banks struggled and failed. A lot of them failed. A lot of them struggled. That made people fear a recession, especially with the Fed talking about a potential recession this year and next year as well. That made a lot of people fear a recession. And so, in that regard, what the market pivoted to in terms of economy reactions is they want to see more economic growth. They want to see higher GDP. They want to see, they want to see higher GDP, lower unemployment, higher payroll numbers, right? They're wanting to see signals of less recession fears. Um, what the heck was that? What was that candlestick? I guess it's like the 8 a.m. scrum, but we're a little bit late. But yeah, point is, there's a balancing act, on whether the market's fearing recession or inflation. Right now, it's more so fearing inflation because the market's been mostly pushing up and looks strong, and GDP data came in better, all that stuff. No, I'm good, Sam. I'm not trying to be super competitive with other channels. It's just not worth it for me. Again, other people can be the day trading guru. I'm not trying to be that. We mostly focus on economy data and economics and broad market news and stuff. Um, I don't want to be a day trading guru slanging courses and call outs to my following, embellishing profits to sell courses just doesn't seem like something that I would feel good about, you know. But I digress. No, I pay above normal pay. That's not the problem. Nobody wants to work. Yeah, well, that's nobody wants to work. They've been saying that for a century now. That's not true. People want to work. The problem is the dollar really hasn't kept up with Inflation is the problem. So yeah, I mean, I love day trading. I day trade every day. Again, I really love day trading, But again, I don't want to be a day trading guru. And really, my channel gets the most attention not from day trading stuff. Like again, the anybody that wants to critique me, the first thing they target, like this dude day trading. It's like, who cares how I day trade, bro? I can lose every day in a row, and nobody can tell me a freaking thing about it because I'm not selling a course. I'm not claiming to be good. I don't care about any of that stuff. It's too much pressure to live by. But again, you got people that compete with me or that they're just desperate to criticize the channel, right? So like the only way they really can is to say, hey, well, this guy's not as good of a day trader as this guy. And it's like, all right, cool. Who cares, man? In the end, that's not really what this channel is about. And I think the economy and the broad market is a bigger audience anyway, you know. Uh yeah, I don't want to like again, most day traders like day trading's great. I love day trading. And if you're good at it, it can be a genuine skill that you can build money with for sure. The problem is that when you're selling a course and you're acting like an expert, you know, it just makes people embellish a lot more. And so I don't guarantee anything. I don't guarantee I'm profitable. I don't guarantee that I'm a great trader. I don't even call myself a good trader. It's my channel's not about any of that stuff. And I think, you know, you can either watch somebody that embellishes everything or you can watch somebody that's honest about it. And I would rather watch somebody that's honest about it. But again, some people are sold that dream of getting rich and doing all this stuff and taking $1,000 and turning it into 50K, you know, and it's just a dream, man. And a lot of people they're really rigid with it and they stay to that. Like they can't look at it's really hard for them to look at it objectively because they so desperately want it to be true. And so anybody that says it might not be true, they just lash out and they attack out of emotion. And in the end, it's all good. Like I don't want drama with other channels. Like I don't want any of that stuff, man. I just stay in my lane, cover economy stuff, market stuff, and you know. All right, so FTX received court approval to liquidate 3.4 billion in crypto assets: Solana, Bitcoin, ETH, WBTC, WETH, USDT, XRP, STG, APT, and BIT. Um, Jim Cramer has loved PayPal for 2 years. 200, 250, and $300 is where he's loved it. Now it's at $63 and he quote doesn't want to own the stock and it's a value trap. You know, inverse Cramer posting this, man. Honestly, this is kind of where I'd want to buy it. That's how I'm not really following Cramer is because when Kramer doesn't like it is usually where I like buying it, because that's the problem with Kramer, right? Is like he's too rigid with stocks he buys. And when I think it's time to buy, like right now might be the time to buy PayPal, in my opinion. Jim Cramer's usually saying he doesn't like it. And when Kramer's saying he likes it when it's at super obscenely high prices, then you know, it's kind of the same thing with like Kathy Wood, although Kathy Wood has gotten a lot better. Like I've grown so much more respect for Kathy Wood lately, but like a lot of her buys are just really hyped up extended stocks on the upside, and I'm just not. It's the opposite of where I enter positions. But they always say like enter your entries are less important than your exits. Man, casinos are chaotic right now, bro. I could never imagine being addicted to slot machines though. Like the game is so obvious with slot machines. It's like, bro, they're gonna put a bunch of shiny, big lights, strobe lights, shiny things, like overstimulation. Like for me with ADHD, it's just like overstimulating going to that and playing slot machines. And again, slot machines have the worst statistical edge in the casino. And so they're basically putting a bunch of shiny stuff in front of you, hoping you pay them money for those shiny things. And you just do it over and over and over and over again. I can never imagine being addicted to that. It just seems like a bad idea. I'm a poker player though, so like I'm biased against low edge games and casinos. But yeah, honestly, they're all getting hacked right now, which is crazy. All right, guys, we got 2 minutes before the ECB rate hike decision. 2 minutes. Still got 20 minutes or so before the actual stuff comes out. Oh, there's no music. My bad, team. There you go. Sorry. Yeah, so the ECB rate hike decision about to come out again. They're expecting a pause or a skip. We got a minute and a half left, guys. A minute and a half left. Yeah, for sure. That's me too, BG. That's what I do. Poker, maybe some blackjack for fun, but I'm not risking a lot. Again, Carol and I went to a casino in Michigan because I wanted to play poker, right? When we got there, they didn't have live poker. They only had online poker or like video poker. And so I had taken out like, love you, bud. My buddy, hey, here, ask your mom to brush your hair, bro. I love you, dude. Your hair looks great, man. Your hair looks great. All right, love you, bud. Yeah. Love you. Have a good day. Yeah. All right, guys. ECB rate hike decision, 45 seconds. Make sure you hit the live button next to the play button. Make sure you're fully caught up on the stream. Again, the ECB rate hike decision in 45 minutes or in 45 seconds. They're really about 30 seconds now. Again, they're expecting a pause or a skip, 3.75. They're probably going to hold it steady at 3.75. But we'll cover it. I mean, they're almost certainly going to pause or skip, but we'll cover it. The press conference is at 8:45. The rate decision is in 10 seconds. All right, here we go. Here's the report, and there it is. Let's see what they said. All right. Oh, they raised rates. They raised rates, guys. They raised rates. A shock. 25 basis point rate hike, bro. They shocked the market. They raised rates 25 basis points. You can see the SPY dipping down. They raised rates. They raised it from 4.25 to 4.5. And that was a shock. Everybody thought they wouldn't raise rates, but they did. They raised rates 25 basis points from 3.75 on the deposit facility rate to 4, and from the ECB interest rate from 4.25 to 4.5. Interesting. Yeah, so they raised rates 25 basis points. What a shock. Interesting. Well, most analysts and banks expected them that they weren't going to raise rates, but we'll put this up on screen. It's a shock. It's not really what they usually do. Usually they don't. Usually they go with what's expected, but interesting, hey? Market's actually reacting really positively to this. I guess it's seen as an optimistic thing. I've seen a lot of inflation fears lately, and so this kind of parries with that in terms of like reactions. Market's actually reacting positively to this, which is interesting. But yeah, ECB raising rates. I've checked twice to see if I'm on the right stream or if this was a recording. Not saying I've ever done that before, LOL. Yeah, listen, this is a recording, and you know, I'm just a robot that accurately predicted what you were going to ask me and responded appropriately to it. So yeah, you are on a recording right now. Smokies. Yeah, I mean, we didn't really get much of a reaction to the ECB rate hike decision, but again, guys, we still got 15 minutes left. Y'all be ready. All right, team. Are you a recording? Am I a recording? I'm a dude. He's a dude. She's a dude. We're all dudes. SPY at 448.70s here. Look at the market rip up on the ECB rate hike decision. Kind of a shock here, man. Market's heading up on this, which is interesting. Again, they surprise raise rates, which generally is going to be seen as a more hawkish thing. I mean, more rate hikes than expected is more hawkish than expected, but maybe with more long-term damage to inflation, it's being seen as a positive, optimistic thing. And if you don't know, that's a quote from Good Burger. It's an old 90s movie called Good Burger. All right, if you didn't know the reference, look up Keenan and Kel. Honestly, I'm glad inflation is getting worse again. By the time November got here, we could be in a lot of trouble, so the market may feel this level out. Yeah, I mean, the market's loving this here, up to 448, 449. Still not the biggest move, but it is reacting much more positive than a lot of people expected. Yeah, so they raised rates. So again, hikes 25 basis point future. They said future decisions will ensure that the key ECB rate will be set sufficiently restrictive levels for as long as necessary. And again, the market's liking it. What? It's bad? What are you talking about, man? Is Good Burger 2 coming out soon? Is it really? I gotta look this up. It is, dude. Oh my gosh, bro. And they brought Kel back, dude. Honestly, Kel's looking rough. What happened to Kel? I used to love Keenan and Kel, bro. There's also a good show on Nickelodeon called My Brother and Me. It was like an OG show. It was good. Bro, they brought back Fizz too. Carmen Electra, Monique. Wow. They're bringing back the old group here, man. My daughter and I love Good Burger. My son's never really seen it, but my daughter and I, one of our shows was Good Burger. They're bringing back Kel. Cool, man. I haven't seen him in much lately. All right, so the Q popping up a little bit. Again, we got 10 minutes before the rate hike decision and all this stuff is announced. Yeah, Legends of the Hidden Temple, man. Honestly, I used to get so hyped for that show. Guts as well. Guts, Global Guts. Legends of the Hidden Temple. There's a lot of fun shows back then, man. Dare. Double Dare. What was the video game show where they let the people play video games? I always liked that show, too. Yeah, I know about Dumb Money. So no, this was actually a surprise rate hike, Alan. So a lot of people were expecting a pause or a skip. They ended up raising rates, which is, again, surprising. Yeah, well, the ECB raised Lucid. This is not the U.S. rate hike decision. That decision is going to be next Wednesday, and it's going to get much more attention and much more of a reaction relative to this. Like, this is actually a small reaction relative to what we'll get next Wednesday, regardless of what happens. So, you know, we usually get pretty big, brash reactions to the rate hike decision. What's going to matter more so next Wednesday is not what the Fed does, because, again, the Fed's most likely going to pause, although I guess this could set the standard of maybe surprise skip or a surprise rate hike. Again, with the ECB raising rates unexpectedly, it's also possible the Fed does next week as well. Again, it's not very likely. Generally, the Fed does what's expected, and Jerome Powell usually does not want to shock people and surprise people. And so it's still pretty likely we're going to pause or skip next Wednesday and then raise in November. But again, ECB, I'm not sure what the standard is with them, but again, they did go outside of expectations with a rate hike, 25 basis point rate hike today. So interesting. Let me know if you guys think it's good or bad. Good or bad. Yeah, for sure. All right, team. Oh, yeah, Bruce is being fixed today. I forgot about that. My dog, Bruce. All right, team. Hey, we got 6 minutes. Yeah, I'm looking up some news here. All right, baby. Hey, listen, I got 5 minutes before really important economic data comes out. I mean, I can try. Again, it's kind of a really important economic release day here. Talk to them. All right, Carol's here, guys. We got PPI, retail sales, jobless claims numbers.
Morning.
Coming out soon. You want me to take this off?
Yeah, this, and put it on this, because I need to bring him in.
Does he need this?
Well, yeah, I wanted to put his name and our address on his collar, since he's going to be up there for today.
Yeah, but they know he's your dog, baby. Yeah. Yeah, baby. I'm sorry. I gotta go. My nails aren't super long, baby. All right. I'm sorry. I love you. All right. Yeah, sorry. Anyways, market gave back that range, still at the volume weighted average price. US 30 dropping now. Yeah, Carol has the worst timing. Yeah. All right, team. All right, again, got a little pop back up, a little chop ahead of this. 4 minutes, guys, 4 minutes. Yeah, honestly, I was kind of frustrated because she's coming in here like 4 minutes before economic reports and asking me to do something, like insignificant, like, but it's all good. You got to be kind to your spouse, even if you're frustrated. Anyways. Yeah. Yeah. Hey, y'all hit that like button, guys. We appreciate it. Yeah, my nails aren't long enough to take that thing off, man. Yeah. No, Steve. Absolutely not. Yeah, I tried. We got 3.5 minutes, guys. 3.5 minutes. Again, hit the subscribe button. Hit the live button next to the play button. You want to make sure your live button is red. 3.5 minutes, guys. 3.5 minutes. Again. All right, so you want to make sure your live button is red to make sure you're fully caught up. We're also going to throw this thing in sub-only mode. But you want your live button to look like this to make sure you're fully caught up. Because, again, the reason we get thousands of people here for these economic reports is because we cover it fast, right? So if you want to be on time with all this stuff, again, stick around and hit the live button. Make sure you're fully caught up, guys. We got less than 3 minutes here, less than 3 minutes. Again, we got retail sales, PPI, jobless claims. The ECB decision is out already. The retail sales, jobless claims, PPI data coming out all pretty soon. Again, core retail sales expected at 0.4%. Jobless claims expected at 225. PPI expected at 0.4%. And so everything's basically expected at 0.4%. Retail sales expected at 0.2%. And again, mostly flat over the last 15. we're going to put this thing in sub-only mode. And so we are in sub-only mode. So everybody hit the sub button, hit the notification bell, announce yourself, show us that you're subscribed. We appreciate it. All right, here we go. 2 minutes, guys. 2 minutes. A lot of stuff to cover, so we're going to do our best to find all of it. Yeah, a lot of stuff to cover. Again, we're going to do our best to cover all of it. Less than 2 minutes left. SPY at 448.60s. We got the Q on the right, the SPY on the left. We could also put the dollar index up if that's helpful. All right, guys, here we go. 1 minute. 1 minute. Again, do you think the market's going to react good or bad to this data? Let me know. All right, guys. Again, we're pretty green on stocks today. The market is very flat. You can kind of see, especially over the last like 10 minutes, we've been kind of going up and down and up and down and up and down. Be ready. The data drops very soon. $30 seconds. Again, hit the live button next to the play button. Make sure you're fully caught up on stream. Yeah, I mean, maybe the data's fake, but most people that say the data's fake were just wrong direction. All right, guys, here's the release. 4 seconds, 3 seconds, 2 seconds. And there's the release. We're going to try to cover everything as fast as possible here. Wholesale sales out. Waiting for the rest of the data report. Core retail sales came in higher than expected at 0.6%. 0.6% higher than expected for core retail sales. Retail sales came in at 0.6%. So higher than expected core and regular retail sales. Jobless claims came in lower than expected. Guys, lower than expected. And the market is mostly reacting negatively. We haven't seen a PPI release yet. So no PPI release yet. But, okay, PPI came in at 0.7%, higher than expected at 0.7%. So PPI, 0.7% higher than expected. Jobless claims, lower than expected. Retail sales, higher than expected. All signals of bad inflation, right? Worse inflation data. Retail sales, 0.6%. PPI, 0.7% versus 0.4% expected. Jobless claims came in lower than expected, which means more people working. Core retail sales came in at 0.6% versus 0.4% expected. And continuing claims came in lower than expected. All of this signals inflation problems. All right, all of this signals inflation problems. So far, we've had higher than expected core and regular retail sales, higher than expected PPI, which is inflationary data, lower than expected jobless claims, which means more people working. And yeah, so again, that's basically what happened just now. We'll put this up on screen. But most of it came in higher than expected. Higher inflation problems than expected here is what I'm showing. And so again, PPI 0.7% month to month versus 0.4% expected. Again, PPI higher than expected. It doesn't necessarily mean we're going to drop. Nobody knows the reaction we're going to get. But PPI came in higher than expected at 0.7 versus 0.4%. We're going to put this up on screen right now just so y'all can see it. And then we're going to create another one so you can kind of see all of it. Retail sales came in higher. Man, you can hit the sub button if you haven't already. Jobless claims, 220. Retail sales. Try to fit all this stuff up on screen if we can. Yeah, retail sales came in at 0.6 versus 0.2%. All right, so here we go. Here's all of it. Here's all of it right there, guys. So that's all of the data. And again, the market is mostly reacting negatively here. I'm probably going to try to short this. Probably going to try to short this. But it doesn't necessarily mean you should. Again, I don't know what the market's going to get here. All right, so again, we're shorting this. Up 130 right now, 130. Now it's reversing on me. But again, we're going to stay short one contract at the NASDAQ here. Inflation data did come in high. Yeah, I'm not going to hold this too long, though. Yeah, I'm just going to cover that. So again, ripping up on us. Market's pretty flat from this report, actually, which is a very underwhelming response to PPI, which is interesting. Again, market's starting to head back up. Yeah, I mean, Ponzi, that's sensationalizing. Empire collapse at hand. Listen, man, we've had like a year of good inflation data. So one bad inflation report in 12 isn't the end of the world, man. Again, I get it. Like, confirmation bias might be there if you know, but like, again, this doesn't signal anything super bad. It's much higher than expected inflation data for sure, though. Market started bounce. Hey, we'll see if it holds. All right, team. So again, so far we've had a neutral reaction. Again, so far we've had a neutral reaction. We're also probably going to cover the ECB rate hike decision. So again, we also had PPI data. All right, so interest rates. All right, so market's testing that bottom low level. We'll see if it holds. But again, honestly, this is kind of an underwhelming reaction. Yeah, so again, we're trying to cover the ECB press conference. All right, so market's kind of bouncing. So we're going to cover the speech as well here. Let's see if we find any good reactions to this. I think my headphones are dying, which is all right. Retail sales data out. And again, we're going to cover the press conference as well. There we go. All right, so remember, the press conference for ECB is later on today, right? So the press conference for the ECB is later on today. Honestly, jobless claims below forecast, but it's higher than previous, which translates to chop. Yeah, I mean, this is not the biggest reaction here, for sure. Market's down a little bit, but like if we really look at this here, like let's take a look at the SPY. SPY's still very green on the day. You know, like this move right here. Again, people acting like it's the end of the world. You know, I get it. Bears are, you know, desperate for a win because the market's ripped up over the last year, but this isn't much yet. Now, I'm not saying we don't continue to drop, but we're just not there yet. And again, we might have some time until we get that. Yeah, so again, the European Central Bank. Let me make sure we got this up and running. Yep. All right, we got it live. The conference is going to be pretty soon. All right, so yeah. Market's bouncing up a little bit. Yeah, I mean, like I said, I'm not gonna argue with you, KC. You know, you seem to like arguing with people, man. Again, I think if you watch the market enough, the big thing to understand, number one, is that there's a difference between a big green candle when nothing's going on, which is what I'll call ripping, and this reaction in the SPY for a major economic report, right? So for PPI, guys, which is the producer price index, it's like CPI. This is a very, very underwhelming reaction. I think if you look at that objectively, that's obviously true. Anybody that watches these major reports like CPI, PPI, interest rate decisions, all that stuff can recognize this a pretty small reaction to it. And so I get it. People might want the market to drop. I get it. Like, people, you know, there's a lot of ego that floats around in the markets, but this is a very underwhelming reaction to PPI, especially with like what I would consider not good inflation data. You know, like it's just not good inflation data. And again, like we'll see what happens, but very underwhelming reaction so far, and I think that's obviously objectively true. You know, but it's all good. I'm just whelmed, not underwhelmed or overwhelmed. Hey, all good. Again, we're bouncing back up. We're actually kind of flat from this report now, which is kind of my point, which is this is a very underwhelming reaction to PPI data. Very underwhelming reaction. So we'll see. Yeah, tomorrow's quad witch. So tomorrow's quad witching day. Do we have anything else dropping later on today? Again, we're going to cover the interest rate decision in the announcement that comes out in 4 minutes. Lagarde is speaking at 10 as well. But that's basically it, man. We got the opening bell. We'll still trade and watch. And again, if you haven't already, check out Top Step. Top Step is a funded program for futures. It's a great way to learn how to trade and to day trade with less risk. What they do is they give you a demo, they test your skill. If you can hit the target on the demo while following their rules and conditions, they fund you between 50K to 150K with a 90% split, and you get to keep your first 10K in profit. What this allows traders to do is limit their risk when they're learning how to day trade. Most day traders lose money, right? I lost thousands in my first few weeks day trading, and I wish I had something like this, because in futures, again, you can day trade the NASDAQ. I can day trade the SPY in what's called the E-mini, at least the same price action as the SPY. It's the S&P 500 price action. It's called the E-mini in futures. You can day trade the NASDAQ, which is basically the Q. You can day trade currencies, gold, silver, and the patterns are very similar to stocks, but there's no PDT restrictions, and these funded account programs are allowed and regulated. And so really useful, because again, it allows you to, if you lose a funded account program, they're going to give you a demo. The base one's 50K. If you lose on that, you're down $49. If you're good enough to pass it, you get a 90% split, basically very similar to what it would be putting up the money yourself, but with just less risk. And so it makes tons of sense for traders if you're struggling to be profitable, or if you want to get some exposure to day trading, but you don't have enough money, or you don't want to take that risk. I think it makes perfect sense to try this out. But they are a sponsor of mine. I'm definitely biased because they pay me money. But if you want to check them out, great way to help support the channel. Here's the link. Great way to help support the channel again. Check it out. Hey, thank you, Nomad. I appreciate you, brother. Thank you, sir. Hey, what's up, Reclaim? Yeah, all good, dude. Yeah, in the end, guys, just don't be emotional about directions. Again, like a lot of the time, what you see is people that really want one specific direction. They pressure, they pressure, they pressure, and then when we don't get that reaction, they say it's manipulated or the numbers are wrong or whatever it really is. But in the end, it really goes down to like, don't give definitive statements or answers because nobody knows what the market's going to do. And this is a pure example. Again, I would say this PPI data is really not good, but the market's kind of up from it. We're actually slightly green from this PPI report, which is very strange, right? But again, the market's nonsensical, which is why you should never pressure people to do anything because nobody knows how the market's going to respond. And yeah, we'll see what happens, but interesting for sure. All right, guys, we got the ECB press conference where the European Central Bank is going to be speaking. This might influence markets too. We'll see what happens. No, we're pretty much flat. All right, guys. Let's see if we get some good movement here. Again, market's kind of flat right now. We also have the ECB rate hike decision. We're waiting for the press conference to start. We're sitting here. Mute the music so we can actually get ready for this because it's about to start now. There we go. All right, look. Over VWAP on the SPY. Q was pushing up. My stocks are even more green today, which is just very strange, but hey, I'll take it. AMC is up nice. PayPal is up nice. Yeah, it probably means the market was already baked into this. NASA UFO report. All right, we'll see. All right, guys. It's supposed to start in 15 seconds. Yeah, I'm gonna make sure we're getting this right. Let me find home. All right, here we go. I see people walking up now. Still not up yet. All right, so we'll see what the ECB, the European Central Bank, says for all this. $400 likes. Hey, hit the like button, hit the subscribe button. Thank you so much. No, this is live right now. Yeah, thank you, Ivan. Yeah, they still got some really annoying hold music. They're just taking pictures right now. But again, watch the market pop. Hey, we'll see if it holds, guys. I'm hoping it does. Hey, thank you so much for the dono, Thomas. Tom, thank you so much, man. Volt symbol. All right, so I think they're about to turn the music off and actually start talking. All right, can y'all can hear the music, correct? Or no, not right now. Hold on.
Good afternoon and welcome to our press conference.
Sound check.
I'm joined on stage by President Lagarde and Vice President de Guindos. My name is Wolfgang Kreusel. For our online participants,
sorry, guys, I gotta
if you
switch
ask
out
a
my
question,
headphones.
please turn on your camera.
Real quick.
So much and welcome to all of you after this summer break that I hope you enjoyed. The Vice President and I welcome you to our press conference. Inflation continues to decline, but is still expected to remain too high for too long. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. In order to reinforce progress towards our target, the Governing Council today decided to raise the 3 key ECB interest rates by 25 basis points. The rate increase today reflects our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. The September ECB staff macroeconomic projections for the euro area see average inflation at 5.6% in 23, 3.2% in 24, and 2.1% in 2025. This is an upward revision for 23 and 24, and a downward revision for 25. The upward revision for 23 and 24 mainly reflects a higher path for energy prices. Underlying price pressures remain high, even though most indicators have started to ease. ECB staff have slightly revised down the projected path for inflation, excluding energy and food, to an average of 5.1% in 23, 2.9% in 24, and 2.2% in 25. Our past interest rate increases continue to be transmitted forcefully. Financing conditions have tightened further and are increasingly dampening demand, which is an important factor in bringing inflation back to target. With the increasing impact of our tightening on domestic demand and the weakening international trade environment, ECB staff have lowered their economic growth projections significantly. They now expect the euro area economy to expand by 0.7% in 23, 1% in 24, and 1.5% in 25. Based on our current assessment, we consider that the key ECB interest rates have reached levels that, maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to our target. Our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restrictions. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. The decisions taken today are set out in a press release, which is available on our website. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions.
Spy, rip it up.
So turning to the economic activity. The economy is likely to remain subdued in the coming months. It broadly stagnated over the first half of the year, and recent indicators suggest it has also been weak in the third quarter. Lower demand for the euro area's exports and the impact of tight financing conditions are dampening growth, including through lower residential and business investment. The services sector, which had so far been resilient, is now also weakening. Over time, economic momentum should pick up as real income are expected to rise, supported by falling inflation, rising wages, and a strong labor market, and this will underpin consumer spending.
Man.
The labor market has so far remained resilient despite the slowing economy. The unemployment rate stayed at its historical low of 6.4% in July. While employment grew by 0.2% in the second quarter, momentum is slowing. The services sector, which has been a major driver of employment growth since 2022, is now also creating fewer jobs. As the energy crisis fades, governments should continue to roll back the related support measures. This is essential to avoid driving up medium-term inflationary pressures, which would otherwise call for an even stronger monetary policy response. Fiscal policies should be designed to make our economy more productive and to gradually bring down high public debt. Policies to enhance the euro area's supply capacity, which should be supported by the full implementation of the Next Generation EU programme, can help reduce price pressures in the medium term while supporting the green transition. The reform of the EU's economic governance framework should be concluded before the end of this year, and progress towards capital market union should be accelerated. Looking now at inflation. Inflation declined to 5.3% in July, but remained at that level in August, according to Eurostat's flash estimate. Its decline was interrupted because energy prices rose compared with July. Food price inflation has come down from its peak in March, but was still almost 10% in August. In the coming months, the sharp price increases recorded in the autumn of 2022 will drop out of the yearly rates, thus pulling inflation down. Inflation, excluding energy and food, fell to 5.3% in August from 5.5% in July. Goods inflation declined to 4.8% in August from 5% in July and 5.5% in June, owing to better supply conditions, previous drops in energy prices, easing price pressures in the earlier stages of production chain, and weaker demand. Services inflation edged down to 5.5%, but was still kept up by strong spending on holidays and travel and by the high growth of wages. The annual growth rate of compensation per employee remained constant at 5.5% in the second quarter of the year. The contribution of labor cost to annual domestic inflation increased in the second quarter, in part owing to weaker productivity, while the contribution of profits fell for the first time since early 2022. Most measures of underlying inflation are starting to fall as demand and supply have become more aligned and the contribution of past energy price increases is fading out. At the same time, domestic price pressures remain strong. Most measures of longer-term inflation expectations currently stand at around 2%, but some indicators have increased and need to be monitored closely. So what's our risk assessment? The risks to economic growth are tilted to the downside. Growth could be slower if the effects of monetary policy are more forceful than expected, or if the world economy weakens, for instance, owing to a further slowdown in China. Conversely, growth could be higher than projected if the strong labor market, rising real incomes, and receding uncertainty mean that people and businesses become more confident and spend more. Upside risks to inflation include potential renewed upward pressures on the cost of energy and food. Adverse weather conditions and the unfolding climate crisis more broadly could push food prices up by more than expected. A lasting rise in inflation expectations above our target or higher than anticipated increases in wages or profit margins could also drive inflation higher, including over the medium term. By contrast, weaker demand, for example, due to a stronger transmission of monetary policy or a worsening of the economic environment outside the euro area, would lead to lower price pressures, especially over the medium term. Turning now to the financial and monetary conditions. Our monetary policy tightening continues to be transmitted strongly to broader financing conditions. Funding has again become more expensive for banks as savers are replacing overnight deposits with time deposits that pay more interest, and the ECB's targeted longer-term refinancing operations are being phased out. Average lending rates for business loans and mortgages continued to increase in July to 4.9% and 3.8% respectively. Credit dynamics have weakened further. Loans to firms grew at an annual rate of 2.2% in July, down from 3% in June. Loans to households also grew less strongly, by 1.3% after 1.7% in June. In annualized terms, based on the last 3 months of data, household loans declined by 0.8%, which is the strongest contraction since the start of the euro. Amid weak lending and the reduction in the euro system balance sheet, the annual growth rate of M3 fell from 0.6% in June to an all-time low of minus 0.4% in July. In annualized terms over the past 3 months, M3 contracted by 1.5%. So in conclusion, inflation continues to decline, but is still expected to remain too high for too long. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. In order to reinforce progress towards our target, the Governing Council today decided to raise the 3 key ECB interest rates by 25 basis points. Based on our current assessment, we consider that the key ECB interest rates have reached levels that, maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to our target. Our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission. We are now ready to take your questions.
Thoughts on this, guys? Hey,
Thank
look,
you,
the
Madam
market
Lagarde. And the first question
is doing
goes
all right.
to
It's not
Mr.
up
Vice
huge.
Prof. CNBC. Netze, please.
President Lagarde, thank you very much. My first question would go, a general one. How did the discussion go? Because clearly before going into the meeting, there was much room for the so-called doves, but also the hawks. So how did you come to a compromise? And the second question, is that a dovish hike, meaning that's it now? Or is it a hawkish pause? Of course, not a hawkish pause, but is that the end of the rate hiking cycle, or do you leave the door open?
They're going to leave the door open. They're not going to say it's over for sure. Maybe I'm wrong, but
Thank you very much for your 2 questions. So how did the discussion go? We had a lot of data, a lot of analysis done by staff. And obviously this was a projection meeting and projections that was prepared by the ECB staff.
they can change.
So we looked very closely at all those data. And to give you an example, we spent hours and hours yesterday, morning and afternoon, with the usual presentation by staff in the morning and by the chief economist and the member of the executive board responsible for markets, to have as much as possible intelligence, numbers, analysis. And I'm pleased to say that at the end of this morning session, we came to the conclusion that we shared the analysis that was conducted on GDP, on inflation, on anticipation.
All right.
And obviously, some members did not draw the same conclusion. And some
wanted to
governors
pause.
would have preferred to pause
Yep.
and reserve future decision once more certainty, more intelligence would have resulted from the passing of time and the impact of our many previous decisions. But I can tell you that there was a solid majority of the governors to agree with the decision that we have made and that I have just read to you. So yes, there are a few members in the Governing Council who would have preferred another one, and we had to rely, as I told you, on a solid majority. It is not the practice to give numbers of who did what and when, but suffice to say that the majority was solid. And it was a very, I don't want you to believe that we had an antagonistic adversarial discussion. We really went deep into the numbers and the analysis and tried to really take into account the sensitivity analysis, the scenarios that were provided by staff, really discuss the baseline and the impact of our measures in the past. And I'm happy to go through the process that we followed in terms of reasoning. Now, on your second question, is the door open or is the door closed? It was a beautiful theater play by Marivaux who said that a door has to be either opened or closed. But this is theater. And what we have decided is actually reflected in that key paragraph, which I have read twice because it is in the body of the text, which was released to you earlier, and also in the conclusion of the text, which is that, and it has caveats, based on our current assessment. So it is based on all the data, the numbers, the analysis, the assessment, the projections, and any other information that we have available. We consider that the key ECB interest rates have reached levels, okay, note levels, that, maintained for sufficient long duration. So there is the time element that comes up, will make a substantial contribution, those are heavy words, to the timely return of inflation to our target. And that we don't stop here. The whole paragraph is important and needs to be read in symbiosis. So the next sentence says, our future decisions will ensure that the key ECB rates will be set at, repeating, sufficiently restrictive level. That's number one. For as long as necessary, number two. Those are really two parameters that are going to guide us very much. Not that we are forgetting about the three components that have guided our reasoning so far, and we continue. We will continue to follow a data-dependent approach. You've heard that before. Data-dependent approach to determining the appropriate level and duration of restrictions. In particular, our interest rate decisions will be based on our assessment, and I repeat there, it's in the text, number one, inflation outlook in the light of the incoming economic and financial data. Number two, the dynamics of underlying inflation. Number three, the strength of monetary policy transmission. So that addresses your question, and I think that the exegesis that no doubt some of you will conduct in relation to substantial contribution and how that substantial contribution contributes to significant level maintained for as long as necessary based on current assessment gives you the answer to your question.
What a long answer that didn't really say
Thank you.
anything.
Now turning to our online participants, I'd like to give the floor to
Sheesh, man,
Balázs
what a long
Korani
answer.
of Reuters. Balázs, please.
Still don't know the answer to
Thank
that
you so much
question.
for taking my questions. First question is about asset purchases, President Lagarde. is 2024 carved in stone for PEP reinvestments? And if not, do you expect a discussion on the APP? Do you expect a discussion about outright sales of bonds? The second question is about the growth outlook, which is about, I guess the question is whether a recession is becoming your base case for the Eurozone. Do you expect a recession perhaps in the third and fourth quarters, or do you still believe that the quarterly numbers continue to remain positive?
Thank you very much for your two questions. On your first question, we regard interest rates as the key tool in the work that we are doing in order to reach our 2% medium-term target. So we have not discussed the PEP program and the reinvestment and the forward guidance. PEP is our flexibility instrument, as you know, and is the first line of defense if we want to defend proper transmission of our monetary policy. We have not either discussed any kind of APP outright sale. And on your second question, I want to, sorry, you're missing a little bit of happening here on the floor because something is falling, but you're not with us, so I have to tell you what's going on here. So you are correct, Balázs, that the GDP has been revised significantly. We moved from 0.9 to 0.7 in 23, and more importantly, we moved from the 1.5 to 1% in 24. But let me just take a moment to explain to you what seems like the biggest revision, which is 2024. Most of it, actually 3/4 of that revision, 0.5, is actually attributable to carry over from 23. So we are going through a period of about 5 quarters of very, very sluggish growth. And we are, based on our projection, coming to the end of it. And the pickup, according to the same calendar, the same quarter calendar that we have had in the June projection, picks up again in 24. The downgrade from 1.5 to 1, as I said, is carryover from 23. In 25, we have a small revision, and we move from 1.6 to 1.5, which is really a minimal revision. But in essence, the recovery that we had planned for the second half of 23 is actually pushed out into time for various reasons that I'm happy to expand upon. But that's what we are seeing.
Okay.
Thank you. And the next question goes to Alex Weber of Bloomberg. Alex, please.
All right, Bloomberg here.
Good afternoon. Here. I'm over here.
Oh, yeah.
I had two questions as usual. You say that the current level of interest rates will make a substantial contribution to fighting inflation if maintained for a sufficiently long period of time. Did you have a discussion in the Governing Council what sufficiently long means in practice, for how long rates will have to stay at the peak at the very least? And then as recently as when you gave a speech in Sintra, you said the ECB is unlikely to be able to call the peak in interest rates in the near future. Just wondering what exactly made you decide that now's the time to at least allude to the fact more strongly. Thank you.
I'm not going to annoy you with the rereading, but you obviously all picked up that the level, our two key determination are level sufficiently restrictive for long enough so that we are confident that we are reaching the 2% medium-term target. And as indicated in that paragraph that I have read, under current assessment, we believe that the interest rates that we decide will provide a substantial contribution to that target. But with the two elements, sufficiently restrictive, number one, for long enough. Now, your real question is, did you discuss the long enough? And the answer to that is no. because we're also saying in the same breath that we will be data dependent. So what we want to do is continue to be data dependent and test our assessment that I have just described for you against future projections and subsequent assessment. That's what we are tasked to do, with the determination to reach the 2% medium-term target in a timely manner. Now you had
Basically,
a second question.
no answer.
Oh yeah, Sintra.
Speech.
You know, we are not saying, I'm not changing anything from Sintra. I stand by what I said and I wrote in Sintra. And we are not either saying that we are now at peak. I think the sentence that I read is really the critical one. With today's decision, we have made sufficient contributions under current assessment to returning inflation to target in a timely manner. And as I said, both elements matter: the level, sufficiently restrictive, and the duration. But it's obvious that the focus is probably going to move a bit more to the duration, but it is not to say, because we can't say that now, that we are at peak.
Right. And the next
So
question.
I know it's complicated because the as long as necessary cannot be actually pinned down, and the substantial contribution cannot be either pinned down, because it's every time an assessment that we have to conduct against the data, against the analysis, against the various information that we derive from experts, and against the projections and what our staff offers.
Okay, thank you. And now the next question goes to Aude Kerselek of BFM Business. Aude, please.
Thank you for having my question. At Jackson Hole, you told that the ECB has to maintain its credibility with the public. How do you evaluate the ECB's current credibility? And second question is, 15 years after Lehman collapse, do you think that banking system in Europe is safe from such a crisis? And what about the shadow banking?
Those are big questions, you know. So on credibility of a central bank, I know that the experts will give you probably a lot of measurements and surveys and indicators to determine whether the central bank, ours or any other central bank, is credible, is losing credibility, is gaining credibility. What I know is that the ECB is on a positive path directionally. But my definition of credibility is that we deliver on our mandate. Our credibility on the line is to reach the 2% medium term in a timely manner. And we will do everything we have to do in order to deliver on that. That's credibility. You have a mandate, you have to deliver against that mandate. On the stability and strength of banks, my dear Vice President.
Good afternoon.
Of banks.
Well, 15 years after Lehman, I think that the situation of the banking industry in Europe is totally different. Banks are much more resilient. This is something that we have reiterated several times. The capital levels, the quality and the level of liquidity are not comparable to the situation 15 years ago. And I think that that makes a big difference. And I think that we have a very good example, what happened in March. In the US and with Credit Suisse, you know, these kind of events didn't have any impact on the European banks. And after that, we had our stress test exercise that indicated that the European banks, that they are resilient, that they can withstand even, you know, a very severe scenario. And I think that this is a proof that the situation has changed quite a lot for better. Perhaps now the attention is much more on the non-bank part of the financial system. I think that there, you know, in terms of financial stability, we have identified many more vulnerabilities now. But that's the focus of attention that we are putting now in terms of financial stability.
Thank you, Vice President. The next question would go to Martin Arnold of the Financial Times. Martin, please.
Thank you. President Lagarde, 2 questions from me. Firstly, what do you say to people who might accuse you of making a likely recession worse and adding to the woes of the Eurozone economy? Second question is to ask you whether the expectations that national central banks and the European Central Bank are likely to make sizable losses in coming years, is that having any impact on your discussions? Is that something that is having any impact on your decisions at the ECB? Thank you.
Well, thank you. Thank you very much, Martin. I will dispose of the second because I think it's going to be a fast response to your point about whether the likelihood or possibility of national central banks or the ECB to make loss, does that impact on our decision-making process and our decision? The answer to that is no. Because, and in a way it addresses also now the first question. No, because the objective that we have, the mandate that we were given is price stability. It is not to make profit. It is to procure price stability within the euro area. And I would observe that the fight that we are leading, we're not the only one, but the fight that we're leading against inflation is making progress. And what we're doing today is trying to reinforce that progress. Remember back in October, we were at 10.6. We're down to 5.3 now. So it's been divided by half. Is it satisfactory? No, because it is, and it is expected by our projection to still remain too high and for too long. But inflation has declined, and we want it to continue to decline and to reinforce that process. And we're doing that not because we want to force a recession, but because we want price stability to be there for people who are taking the brunt of inflation, high prices, and predominantly so those who are not the most privileged people.
Thank you, President Lagarde. And the next question goes to M&I, let me just check the name, Santiago Pinol. I'm sorry. Santiago, please.
From Spain?
Santiago Pinol of M&I.
Hello, good afternoon. My question is, if the data-dependent and held for long are at odds at each other, and if this can be contradictory, and if you are prepared to cut rates if growth slows further. In other words, it's sufficiently restrictive. That sentence could imply a cut. Thank you.
This is not even a word that we have pronounced. But yes, the data dependency applies to both the determination of the sufficiently restrictive level, as well as the length of time where it has to stay at that level. So we don't see any contradiction in terms in having the two components in the same sentence. One will drive the other, actually. And on your other, I think I addressed your second one.
Thank you. Then Christian Siedenbiel of Frankfurter Allgemeine Zeitung. Christian, please.
Yes, thank you. Good afternoon. Madame Lagarde, how much are the problems in the real estate market affecting the ECB?
Well, thank you for the question, because that's certainly an area, whether you're looking at residential real estate, which affects, obviously, at the end of the day, households and people, or whether you look at commercial real estate, this is a sector that is clearly responding very much to the current circumstances. The level of interest rates and the financing tightening that we are conducting to bring inflation down is one of the factors that that cause this overall real estate sector to be in a difficult situation at the moment. I mean, we're not oblivious to it. We know it. And, you know, as I said to Mr. Arnold earlier on, we are not driven to sustain and support a particular sector. We are driven by the imperative of delivering on our mandate, which is price stability. And we want to do that timely.
Thank you. And the next question goes to Eshe Nelson of the New York Times. Eshe, please.
Good afternoon. I'm Isha Nelson from the New York Times. Can I ask for your assessment on the pace and the strength of the transmission of monetary policy? You noted the fastest contraction in household loans. Do you feel that monetary policy is transmitting as quickly as you would like, too quickly, too strongly, or slow enough? And then in the past, you've talked a lot about the ability for wages to keep rising as long as companies absorb those labor costs in their profits. Are you starting to see that be possible, or is there a risk of either kind of wages diminishing or profits returning to where they were?
Well, thank you so much for the two questions. On the transmission channel, there is evidence that the current hiking cycle is transmitting to financing conditions faster than previous ones. So you will remember that we use three three elements in our assessment. One is the inflation outlook, the second one is underlying inflation, and the third one is the strength of monetary policy transmission. On the third one, I think we all shared the same view in the room earlier today, that this channel of transmission is strong and stronger than we have seen in previous cycles. So when you look at how fast it transmits to various rates, whether it's overnight or whether it is longer term, it's extremely rapid. And it's reflected in the lending rates for corporate, in the lending rates for household, which I think I mentioned as 393, and in the monetary policy statement. There is a transmission, and it is having a constraining impact that is visible when you look at M3, when you look at the volume of loans, when you look at the interest rate. So it's really clearly the fact that transmission is effective, and more so than in the past.
All right, guys, so we're going to go ahead and end it here because I'm going to prep for the market open. I'll give you this link. So if anybody wants to watch this press conference, here's the link. We're going to get ready to day trade the opening bell like we always do. And so again, we're going to be trading on a platform called Top Step. Here's the NASDAQ here. And so if you want to day trade with us, you can. We trade live every weekday. So yeah, guys, get ready. We are going to be day trading the opening bell live. Again, there's the link in chat. NASDAQ's starting to turn a little bit here. So again, pretty flat day considering everything, I think. Very flat, kind of neutral day. Considering, you know, the extent of like retail sales data. Again, retail sales data signifies more inflation problems, right? So it's even more of a shock when you consider like retail sales were higher than expected, inflation data was higher than expected, and the market dipped down. The only explanation I can have is that the market dropped a lot over the last 2 weeks. And so, you know, people already front loaded into potential, like into understanding this reaction. And everybody has to understand, like, again, I've said this many times, but like, listen, inflation data has been mostly positive over the last year straight. And so people acting like it's the end of the world because we get one elevated inflation month. Again, I just don't see that. I'm not saying it's not there, but I just don't see it yet. We're actually pretty flat in terms of everything for markets here. We're pretty flat. We also supposed to have the ARM IPO going live today. So we're supposed to have the ARM IPO live this morning. And so I'm not sure when it's supposed to go live, but NASDAQ flat right now. We got 23 minutes. And yeah, we'll see if we get anything good. And again, we got PPI, retail sales data. All right, team. This all right, we got the ECB thing done. And again, Lagarde's questions just seem to be like the answers to them just seem to be inflated, where it was just a little bit too much of fluff for me in her answers. Like she just referenced, and again, they don't like giving definitive answers or statements. It's not something they generally like to do or see. So hey, thank you so much for the donation. Gain, thanks so much, man. Let's put the music back up and get ready to day trade. Again, if you want to day trade with me, I'm day trading on a platform called Top Step. It's a funded program for futures. It really is like, listen, if you want to learn day trading, the futures market is probably where you should go. There's no PDT in futures. Like if you try to day trade the SPY itself, you can't day trade if you got less than 25K in a margin account. In futures, most pro day traders trade futures because there's better liquidity. You could day trade the NASDAQ. You could day trade the S&P. You can day trade currencies. You can day trade gold and silver. And the NASDAQ and the S&P is basically the SPY and the Q. And the patterns are very similar to like large caps. A lot of the time, Apple, Amazon follow these ETFs. And so the patterns are very similar. So you can essentially get exposure to stocks day trade with less restriction. And Top Step's the most legit funded program in the world. They pay out millions in actual withdrawals every year. They fund thousands a year. It's just limited risk. If you lose on Top Step, the base one's $49. They give you a demo. They test your skill. If you pass it, you get a 90% split. So if you make 10K once you pass it, you get to keep 9K and your first 10K of profit. And so if you want to check it out, here's the link. All right, so there's the opening bell, guys. So here's the open. And again, market's mostly green. It's not a huge green day, though. It's not like it's super green, Ruby Rod style, but it's green when inflation and retail sales data were elevated, which is interesting. Again, I think it's really interesting. Yeah, we'll see if it recovers. There's the Top Step link in the chat. If you want to check out Top Step, there's the link. Great way to help support your boy here in this channel. I don't know. She didn't want to give definitive answers, which is okay. Like our Fed does that as well, right? So our Fed does that as well. Yeah, and again, we could get a red day. I mean, inflation data was elevated. It could just be a late response. But again, one thing you'll see a lot is like we finally get a red day when the bears just desperately want one, right? And so even if we end the day at 440s, the market is still incredibly powerfully green over the last year. You know, so I think a lot of times like bearish traders just they need a win because the market's been pushing up for a year straight. And so every small little red day, they're acting like it's the end of the world. And I think it's important for new traders. The reason I keep saying this is because it's important for new traders to really understand that and understand, like, if you listen to everybody in the chat, you might think it's the end of the world, like the sky is falling. But one thing that differentiates experienced traders versus new traders is like they understand fluctuations. And so we'll see. Again, I could kind of see the market reversing and going red a little bit today. I think the inflation data was high. You know, retail sales was high as well, which indicates more recession or more inflation fears, not recession fears. So just be smart. Dude, I'm not really salty. I'm pretty green on the day. I mean, look, look, bro. Here is my P&L in stocks today, dude. Like, look, let me show you this. Again, this is my P&L today. We're up $330 on my swing trades today, brother. So I'm not salty at all. I'm trying to make sure new traders understand like how it really is. Because if you listen to the chat a lot, you're gonna be influenced by bears. Again, if you look at the SPY is actually very green right now. So which is strange. I think the inflation data was bad, right? But again, here's the previous closing price, and that's where the SPY is now. And so the SPY is still very green on the day. And it was green yesterday too. It wasn't a huge green day though. So anything could still happen and we could reverse or go up and down. Nobody knows. He's mostly just trying to troll, is what it is, Joe. Lose 330 in 1 minute. Hopefully not. All right, so market's starting to push back up here. Nasdaq's starting to push back up, but again, we're pretty middle range here. We're still, I think we might be slightly red from the report now. The report came out right here at 8:30, so you can kind of see that we might be slightly red, but pretty much in a neutral range, I would say. We're up more now. We're up 340s a day. I'm not sure when the ARM IPO is going to be. Usually there's not like a definitive time frame that it's going to go live. It just varies back and forth. Carnival Cruise. All right, so there's the market dropping. Again, I could kind of see a red day today because, again, the inflation data was bad. And so it's kind of a shock to most people why the market's pushing up. But we are getting a dip. We are starting to test lows. Netflix. A couple of people asked me about Netflix. I haven't seen Netflix. I've always considered it too extended on the upside for me to really take, and I think that thesis has been shown to be correct because Netflix was at 450 a couple of weeks ago, and Netflix has just climbed back. I mean, Netflix had a bad 21 and 22, where it dipped from $700 all the way down to 170s, but it's since gone from 170s all the way back up to 480s, 490s, and that was just too extended on the upside for me. Maybe as we dip on Netflix down to 400s, I might get a little argument for a dip buy here. I have to figure out appropriate size, but you know, as we dip, I might think about a dip buy. But, I'm pretty green in everything on stocks too. Futures I'm flat. I'm like down like $60 on the day, so could be worse. Disney has been treating me lovely still here too. I'm probably just gonna stay in Disney, man. People love to bring up Disney when it was dipping down. Again, but we're still up about, look, so here's my Disney trade, and we already took a lot of profit on this already. So you can see my average price is 80.90s, and it is at 84s. We're up about 180 on the last 55 shares. I'm gonna go ahead and lock in some more profit here. We got 40 shares left now. Just lock that in. You can see, again, a lot of people talking about Apple after their conference last week. It's up to 174s. Is Coca-Cola moving? It's down a little bit. But I got 50 shares, average price of 58.80s. We're at 58.30s right now, so I'm down $7 on the day. I mean, we'll see. Yeah, what's Bitcoin doing? Also, guys, check out Chart Prime. Chart Prime, a trading view indicator service. You can use it in stocks, crypto, Forex, futures, just to kind of give you some understanding on this, right? Like, again, my favorite way to use it lately has been an hourly chart. So if we pull up like an hourly chart, right? Let me show you guys. Sorry, I'm watching this bounce back on the NASDAQ and Apple. Apple is what's riding back up. Bitcoin all the way back up to almost 27,000 here. So almost back up to 27K for Apple. But yeah, look at the hourly chart, man. It's actually impressive, dude. So like, look, here's an hourly chart on the NASDAQ, for instance, right? And again, this is a sponsor of mine, so I'm definitely biased in their favor, right? But like, look at this. So it shows you these chart patterns. Like, look at this rising triangle wedge, and look at how accurate it is. At the top, it dipped. At the bottom, but look at the buy-sell signals. And again, I can't guarantee you're going to make money. Nobody can, right? Because they're a sponsor of mine. I'm biased, of course, like I always tell people. But like, if you really look at this, all right, like look at how accurate these buy and sell signals were, at least on an hourly chart. Look, buy sell signal here, nice bounce. This is every candle represents an hour. Sell signal way up here. Look at the drops afterwards. Really nice bounce. Strong buy signal here, nice bounce. Strong sell signal here, nice drops. If you tally how much the strong one works too, it's even more impressive, right? So like, look, strong buy signal here, bounce. Strong buy signal here, sell, or bounce. Strong sell signal here, drop. So very impressive. Like, this is genuinely impressive. And again, it shows you, this is a trading view indicator service you can use in stocks, crypto, Forex, futures. You can also put it on any time frame. Like I could put a 1 minute chart, a 5 minute chart up, you know, and it's just useful. Again, you can see patterns on any time frame in stocks, crypto, Forex, futures. And this is like $40 a month. And so, of course, I can't guarantee you're going to make money. You kind of have to back test it yourself a little bit here. So you kind of got to back test it yourself to see which one you like. Like the market oracle will actually show you reversals. But again, look at a 5 minute chart. It's still pretty impressive. Look at the strong signals is what the one that impresses me the most is the strong ones. So let's get the market oracle out, which is reversals. Look at the strong signals here. If you just wait for a strong one, and you can set alerts on trading view too. Look, strong buy signal here, bounce. Buy signal here, bounce. This one might have been wrong. But again, that's like one out of what, the last like 5, 6. Look, you can see the alerts going out on my screen here too. Just genuinely impressive. And again, you can use this in stocks, crypto, Forex, futures. It's a company called Chart Prime. It's like $40. And so I'll post this link if you want to help support the channel. Great way to help support us. I appreciate the love. Check it out right there. Again, market's pretty flat on a day with bad inflation data, high inflation data, high retail sales, which high retail sales is going to be conventionally seen as positive. But again, with this, yeah, I get notifications. I can track it a little bit. You're receiving $20 dividend on KO. What do you mean? Again, market's starting to climb back up. It's mostly being done by Apple here. You can see the Apple stock just ripping up on the bottom chart here. Look, let me show you this a little bit more cleanly. Look, here's Apple on the bottom right. And it is popping up today, man. Kind of catching up some ground from where it lost over the last few days. Tesla ripping up. Oh well, yeah, if you use my link, it should give me credit, Smokies. It doesn't matter. It can ask you who gave you credit, but if you use my link, you know, it gave me credit. Tesla up to 273, still flat though, man. The market's kind of weird today, guys. Y'all just be smart and be careful. I don't know how to look at my pending dividends on TOS. Does it show me anywhere I can look at my pending dividends? I guess I can sign in too. Medium air trade. They get very flat though. We're at a point where my hands are kind of up. I just don't know if I really want to mess with. Can I see where my dividends are paid out on TOS? Anybody know? Or does it just give me? Yeah, I don't know where to look it up. Okay, so I get the next dividend payment. Let me see. All right, so they pay a 46-cent quarter divvy. The next one they pay out is on October 2nd. Okay, yeah, I mean, I'm holding it. I've been in Coca-Cola since, or I guess I bought it on the 12th. So, yeah. I got 30 shares. So, or no, I have 50 shares. So, I mean, I'm not going to make a ton. Like, I'm gonna make $25 in dividend payments from Coca-Cola, which is fine. I mean, I'll take it. You know, it's better than nothing. But it's not gonna. I'm not gonna be rich from my 50 divvies on Coca-Cola. Is PPI of 0.7% considered good? No, it's considered pretty bad. It's much higher than expected. They expected 0.4. They showed 0.7. So you know, 75% higher than expected. And also, you know, it's inflation data, right? So elevated inflation is not generally seen as good, although the market is different. The market's kind of weird and has been weird lately. Carol with the phone calls today, bro. She did one right during the middle of the ECB conference, too. Carol telling me a story about Rosie, you know. Hey. All right, Tesla at 274s. All right, guys. Why doesn't she check in on the stream to see if it's a good time to call? Because she knows I'm going to answer it no matter what. It's all good, man. Again, market's flat. NASDAQ flat. SPY's flat. Tesla's pushing up, though. Apple's very green on the day, too. And again, if you want to day trade with me, we're pretty flat today. I don't really like this direction, though. Like, here's my P&L today, actually. So we are down. Actually, we're down $68. Or no, $72. So it's not the end of the world. We still got a higher win-loss ratio, but pretty flat day, not crazy. And again, if you want to day trade with me, check out Top Step, funded account program and futures. They give you a demo. They test your skill. Again, futures very similar to trading stocks. Like, look, you could buy market, buy bid, sell the ask. Just like stocks, if you look at like if you look at the SPY or the E-mini, right? If you look at the Q, right, which is really day trade, it's the same action. Like, look, this is the same as this, right? But there's no PDT roll on this left side in futures. And Top Step's a great way to learn, great way to get your feet wet with less risk. Again, they pay out millions in actual withdrawals by their funded traders every year. So they're a legit firm and genuinely useful. They're the most legit one in the world. They've been around for over 10 years. And again, they test your skill. Just take in the challenge, build your skill, and it's only 49 bucks. Like, people hate on them, but like, some demo accounts cost more than a Top Step account, right? So people complaining, like 49 bucks. The Q is starting to bounce up a little bit as well. But yeah, they're a sponsor of mine, so of course I'm biased. Yeah, I'm in Oracle right now. So we're riding Oracle up. We bought Oracle yesterday, or I think it was yesterday. It might have been the day before. But yeah, we bought it yesterday. In Oracle, hey, still haven't taken any profit with it yet. I'm debating on whether I should sell half and then sit on the rest, or whether I should just not sell any and just wait. My average price is 109.60, and it's at 114 right now for Oracle. What do you guys think? I might take like a third of the position off, so I'll have a compromise. I'll take like a third of the position off. Probably what I'm going to do. We just took a third off. Sorry, team. Yeah, but retail numbers are going to be seen as a negative with inflation fears as well, which the market has been fearing. You know, retail sales numbers are going to mean the market's fearing inflation even more. And so when you combine that with higher inflation data, with PPI data coming in higher than expected, I don't necessarily think it's going to have a positive effect. I think most likely reaction is the market's just already baked into higher inflation numbers this month. A lot of people are already expecting that. And again, if you look at the market, we've dipped a lot back since the 1st of September. So the last 2 weeks, we're still down a significant amount. That's most likely what it is 2 weeks leading up to this data. Algorithms, big banks, big traders are probably preparing for this type of reaction, is most likely the reason why we're not having like a crazy big red day yet. It also is a little bit early. And so anything could ultimately happen. It's still pretty early. Yeah, I'm not sure when the ARMS IPO opens, man. I know it's supposed to open sometime, but I'm not sure when it's supposed to open. They don't generally give a time frame for it. Like, they don't usually say, hey, it opens up at exactly this time. Again, hit the sub button, guys. We did break. We finally broke over 114,000 subscribers, pushing towards 115K. We're almost halfway there, too. So again, subscribe if you haven't yet. We cover all these major economic reports, releases. We cover them live. We get thousands of people tuning in when the report drops because we cover it quickly relative to most other people. So if you want a reliable place that'll stream all the major earnings reports, all the major economic datas every week, every month, every FOMC meeting, every Jerome Powell press conference, this might be the stream for it here. So again, subscribe, completely free. We don't charge or have any paywalls behind any of our content. And thank you guys so much. We appreciate the love. Did you get a YouTube button? Yeah, I got one. You know, so I might order another one. Once you're eligible to get one, you can always order another one. So I might get another one and put it on the wall or somewhere. I've just kind of been playing with that. Yeah, I got a play button and a letter from the CEO. I don't know if it was an actual letter, but I'm sure they just kind of give it to everybody. Hey, all good, man. We appreciate the support for sure. Very choppy. Market started to break down though. It looks kind of weak. All right, very flat day. We're trending towards the bottom of the range, although my stock positions are actually still gaining value, which is weird. Netflix starting to push up too. million subs eventually? Maybe. We'll see, man. Oh, all right, team. So we are testing lows. I might pivot to a more short-based strategy here. We might get a bounce. I might add 2 contracts here and just let this be my push for the day if we don't get immediate rejection. All right, so there we go. We're green. There we go. Boom. All right, so that brings us to green on the day. We are up about 50 bucks. So small green, little baby short. We're finally starting to get a trend. We've been a lot more patient today. So still flushing down. If we get any big bops up, we might short. All right, so there's some weakness. We're getting bear action, which is, again, kind of a delayed response. Starting to break down. Some weakness coming through. All right, so 12:20 Eastern or 10:20 Eastern Standard Time. So in about 20 minutes, we're supposed to get the RMIPO. They're estimating 12 or 10:20 market time is when they're thinking we're going to get it. There we go. All right, we got a pretty big pop up. I'm going to short this again. It's a large enough bounce to see if we continue into that downward trend, we might get some bear action. It also could be a short day. Again, we're slightly green on the day now. Still going pretty green against me though. I'm gonna take 2 contracts short, but we're gonna be very quick to cut it if it goes against me. Yeah, retracing back down. We're pretty close to flat on the day. Trying to be patient with this. Been doing managing other stuff on this, so if we're down $200 or $300 on this, it's fine. We made $200 or $300 yesterday. Big bounce back. Yeah, we're just gonna have to cut that now. So yeah, we're down like 400, but again, it's pretty small relative to what we're looking for. And we'll give it some time now and see if we get any other better movements here somewhere else. Nasdaq's starting to pop up. Market's starting to fully reverse back up here. My hands are off. Market is basically completely ripped back up now. And so my hands are off. So I'm kind of working with OpenAI plugins and API keys in the background here. So, yeah, it's all good. Yeah, this is the NASDAQ is what I'm trading. All right, so now we're dipping back down. Again, we're so flat, I'm probably just going to close it down for the rest of the day, guys. I just don't see anything that looks really good enough for me to trade. And so again, if you haven't already, hit the subscribe button, hit the notification bell. We will be back tomorrow. It's quad fishing day. We do have the ARM IPO today. So a lot of craziness going on in the markets right now, guys. Again, if you haven't already, check out Top Step, funded program for futures. Very useful for learning how to day trade with less risk. Again, when I first got started, bro, I used a platform called SureTrader to day trade large cap stocks. And I just got absolutely destroyed in the first few weeks. I lost thousands of dollars. And this story isn't really unique to me. A lot of traders experience the exact same thing where, you know, they just get destroyed when they're first learning. And so putting up the money yourself, I get it. You want to look cool. I get it. You want to flash gains on social media, but a funded account program does help limit the risk in the beginning. Most day traders lose money. And so you can either put the money up yourself trying to look cool, or you can trade a funded account, limit your risk. If you lose, you're out $49. But if you're good enough to pass it, you get between 50 to 150,000 in funding with a 90% split. If you make 10K once you're funded, you get to keep 9 of that plus your first $10,000 in profit as well. So just useful. Check out the links in the description for more. Again, Chart Prime, very dope as well, very useful as well. And so if you haven't already, hit the notification bell. I appreciate the love and support. Y'all be safe. Y'all be good. And yeah, see you guys later. Chart Prime again is look at again. I'm just showing you guys this because it can be powerful. So look at the strong sell signal back here, and then we did get weakness from it as well. Let me look at the E-mini also, and you can find Chart Prime in the description if you want to check it out. It's like $40 a month. Like here's a 5-minute chart. I've been liking the Market Oracle Pro a lot lately. But again, the real edge is looking for where it says strong, right? So look at the strong buy and sell signals. Those seem to be like the most powerful. So like, look, here's the strong ones. Look, strong buy signal here, bounce. Strong buy signal here, bounce. Buy signal there. Strong buy signal here, bounce over like hours. Strong buy signal here, bounce. So useful. There's so many other tools. There's patterns. Like you can see, it shows me this full wedge here too, which is cool. But anyways, I'm out of here, guys. Y'all be safe. Y'all be good. I'll see you guys tomorrow. Quad witching day tomorrow, guys. So the day of historical volatility when all 4 major contract types expire same day. That is stock futures, which they don't actually have anymore. So technically it's witching day, but stock futures, index futures, stock options, index options all expire tomorrow. Be ready. I'll see you guys then.